after 20 years of financial repression, we're back to live markets.
The market's probably going to take off again.
We still see a lot of upside opportunity in U.S. markets.
I wouldn't really bet against the U.S.
The U.S. bond market is still the closest thing to a risk-free asset that there actually is.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, recovering from a major storm. Travelers bracing for deepening disruption to begin the working week. The Japanese yen extending gains driven by elevated intervention risk, and gold smashing through 5K, building on a record-breaking rally. Gold on a 6-day winning run.
It's been incredible, building on the momentum we saw last year when gold had its best year since 1979. And really, pick your poison as to why gold has this record run, topping $5,000 a troy ounce today at the very start of 2025. We're still only 3.5 weeks into this new year. It could be anything. There's geopolitical tensions. The U.S. domestic politics right now on edge. You have demand from central banks at historically high levels. Whatever you want to say, all travels right now, all directions seem to lead to gold.
I'll use a word that the Prime Minister of Canada used in the last week or so, rupture. A rupture in foreign relations. Nobody's house is in order. Nobody's house is in order. So if you want to stand the dollar, what are you buying? That's why you're turning to precious metals. It's more fuel, more oxygen for a trade even at these lofty levels.
It's a very good point. You don't have the U.S. right now in order, especially now potentially, Jonathan. We could be barreling down a government shutdown, a partial U.S. government shutdown this Friday. Also, what is going on with Japan? You have snap elections. We saw this play out in financial markets last week. Basically, what everyone is pricing in, the fiscal story dominance of all these countries will continue.
This was a pushback from the market in the last week or so, from the JGB market to be precise. Japan doesn't just have an FX problem. This is a symptom. It has a debt problem. And that's the issue at hand here. Even if you get that intervention, does it address the root cause? And a lot of people in this market would argue no. Yes, dollar yen's got a big move today down to 153.59, but there's some problems they need to address, and it's more than just FX intervention.
Well, part of this is that the Prime Minister's coming in, calling a snap election. She really wants to fortify the fact that she should be running this country and her policies. Well, when she scheduled that election, there was a bond market meltdown. Why? Because her pledge on the campaign trail to waive a sales tax on groceries for 2 years. Just more of these populist policies we are seeing around the world, and that is just going to breed higher debt levels because they're going to be pumping more money.
We've got to talk about this storm as well, away from the markets, the winter storm. Word of advice, don't do what we did this morning. If you can avoid it, don't go to work, avoid the roads. They are absolutely terrible. We've seen the flight cancellations just yesterday, 11,600. On Sunday alone. Already this morning, more than 3,500 flight cancellations.
No snow days for Bloomberg TV. Most flight cancellations since COVID. That statistic is incredible. And then, of course, today around 1:30 a.m. So expect this number to just continuing to rise. As you say, 3,500 flights are going to be canceled. You have to be careful if you are going in traveling, whether or not that's by plane, but getting to the plane. I mean, the streets, Jonathan, you saw them. They're okay, but it's not great. I mean, you have to add at least another 30 minutes to your travel time if you're traveling by car this morning in the tri-state area.
And some. If you're just joining us, welcome to the programme. Stacked programme. No idea if the guests show up in studio. We'll see if that happens a little bit later this morning. Futures negative by about 0.1% on the S&P. Coming up this hour, we'll catch up with Russ Kostrick of BlackRock on elevated geopolitical risk. Amy Gower of Morgan Stanley with gold on a record-breaking rally. And Mike Dada of Roth Capital looking ahead to this week's Fed meeting. We begin this hour with gold at fresh all-time highs. Russ Kostrick of BlackRock writing, while gold has had an extraordinary run, we continue to maintain a modest position. The yellow metal has demonstrated its value as a hedge against both the debasement trade as well as ongoing geopolitical and headline risks. Russ joins us now for more. Russ, welcome to the programme, buddy. Let's talk about this move through 5K, a clean break and some. What's next for this one?
Well, good morning, Jonathan. With gold, I don't think there's any objective way of coming up with a target. But, part of the reason gold is doing so well is, unlike other assets, we can't sit here and say, well, it's overvalued. Because, again, the value of gold is always what people are willing to pay. And I think, as you talked about in the lead-in, in this environment where you have both fiscal issues in most developed countries, not just the U.S., but Japan, the United Kingdom, France, and obviously geopolitical risk that is growing rather than shrinking, gold works in a portfolio because it's one of the few assets that actually hedges against those types of risks.
So, Russ, let's just pair what we saw with gold in the last week with what we saw in the FX market. The dollar, the biggest weekly drop since May last year, on a week where gold had the best week since 2020. Are you expecting more of the same kind of thing to come? And is that a hedge against dollar weakness or a hedge against something more than that?
I think it is a hedge against multiple things, but I definitely agree it is a hedge against dollar weakness. As a matter of fact, one of the things that's really happened post-COVID is a lot of these long-standing correlations have broken down. For a long time, bonds worked as a hedge against equities. And what we've seen over the last 5-6 years is much less stability in these inter-asset class correlations. One that's held up and I expect to keep holding up because it's very fundamental is gold moving in the opposite direction of the dollar. If you're worried about the so-called U.S. debasement trade, if you're worried about U.S. debt, if you're worried about the hegemony of the dollar, gold is generally going to do well in those environments.
Russ, how do equities trade with that backdrop?
That's the funny thing. Equities and gold actually have not been that negatively correlated. And for a lot of 2025, gold and equities have been moving together. So I don't think on a daily basis, if you wake up and the S&P futures are down 1%, you can immediately assume that gold is going to be up. But as a portfolio diversifier, and again, trying to think about some of these risks, whether they're geopolitical or the long-term risk around U.S. debt, those are risks where I think gold does a very effective job, not necessarily the day-to-day fluctuations in the stock market.
Russ, it doesn't seem like these risks are going away. And your note says you have a modest position. Do you think you're going to add more from here?
I think we're probably about where we want to be. It's one of those assets where you have to be careful because, as we've seen in some of the moves, particularly back in 2022, gold can also go down very abruptly. So, again, the exact percentage depends very much on what else you have in the portfolio. But within a classic 60-40 portfolio, somewhere around a 3, 4, 5% position, that seems to work well, particularly in environments like this, where you're trying to compensate for those hard to quantify risks.
We also saw silver absolutely on a tear as well overnight. Do you think this bodes well for the entire commodity complex?
I think there are a few things going on. Certainly gold and silver are moving in tandem. Part of that is silver, while obviously not as liquid, not as popular, still a precious metal that's used to hedge against these type of risks we've been talking about. But there's also a broader rally going on in many commodities, and certainly metals like copper, which are tied to the electrification trade. So in general, we're in an environment where a couple of things are happening. You have these concerns, these geopolitical concerns, concerns about debt, but then you also have a very significant infrastructure build out going on, whether we're talking about data centers, we're talking about the grid, we're talking about power. Many of these metals are absolutely necessary as that build out continues. And our view is that is a multi-year trend, which means that this support for metals, not just precious metals, that's likely to continue.
As for the AI transition, plenty of earnings this week. We've got Meta and Microsoft on Wednesday, Thursday, Apple next week. We'll hear from Google and Amazon. Russ, I want to talk about this move in Japan. Ken Griffin put it this way of Citadel just last week over in Davos, Switzerland. I actually think there's an explicit warning that if your fiscal house is not in order, the bond vigilantes can come out and retract their price. We saw that move in Japanese government bonds in the last week, Russ. What was the signal you took away from the convulsions in sovereign debt?
Well, look, the move in Japan has been very real. It's been very dramatic. And I think we used to joke, we called that the widowmaker trade. People have been looking to short the Japanese bond market for years, if not decades. Obviously, a few things have happened. Japan, over the last several years, has really exited the deflation, which plagued that economy for decades. At the same time, you have a new prime minister that is looking to use fiscal stimulus to support the economy. We're seeing this in most of the developed world. So the fact that you're having this move in the Japanese bond market, while at times violent, it's not a shock. But what's interesting is, yes, we've seen a little bit of a move higher in U.S. yields. But in general, despite what's happened to the Japanese bond market, despite what's happened geopolitically, we haven't really seen the U.S. 10-year break out of the range it's been in for quite some time now. And if anything, U.S. rates, bond volatility, is fairly low. So I do think you've got some concerns about the long end of the curve. You do have some concerns about whether or not you're being adequately compensated by the term premium for going long U.S. debt. But in terms of the spillover effect, U.S. bonds have been relatively stable despite what's been happening in Japan.
So, Russ, that's a great observation, and one that I share as well. I've been looking at the same thing. The fact that we sit here at 420 this morning on 10-year, given all the craziness, is pretty remarkable.
Yep.
What do you think is insulating the US government bond market from the rupture, to use Carney's word again, in JGBs?
Maybe a couple of things. I mean, one, the spillover effects from Japan to the rest of the world, again, they're not always as dramatic as people make them out to be. But I also think the factors that have supported the U.S. bond market, despite the levels of debt, despite the concerns about a sell America trade, remain in place. The fact is there's still no obvious short-term replacement for the dollar. We also have an environment where inflation, while not at the Fed's target, has been heading in the right direction. We haven't seen the type of stagflation that people were talking about back in Liberation Day. And there's still an opportunity to pick up some yield in a portfolio, not just in the Treasury market, but more broadly in the credit markets. You know, again, we're still in a world where for the first time since the mid-2000s, you can build a fairly high-yielding portfolio without taking a lot of credit risk, without taking a lot of duration risk. And again, talking to clients, that's still fairly attractive for a lot of people that were not able to access yield for a very long time.
30s this morning at 480, 10s at 420. Russ, it's good to see you. Thank you, sir. Russ Kostrick there of BlackRock. On fixed income at the end, conversation also about what's developing in Japan. Check out dollar yen, down to 153.53. On that currency pair, we're negative about 1.4%. Some real yen strength in the face of potentially intervention risk. We'll get to that a little bit later. Let's give an update on stories worldwide this morning. Plenty to cover with your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Good morning. A massive winter storm hitting the U.S. East Coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. Parts of Texas and the Mid-South were coated in freezing rain, enough to take down power lines. More than 1 million homes and businesses across the U.S. lost electricity. The CEOs of more than 60 Minnesota-based companies are calling for an immediate de-escalation of tensions between federal, state and local authorities. This following the shooting of a U.S. citizen this weekend. The Minnesota Chamber of Commerce sharing a letter signed by chief executives from companies including Target, Best Buy and General Mills. The European Union is probing Elon Musk's X over concerns it failed to prevent its Grok AI chatbot from generating deepfake images of children. The investigation will check whether X properly assessed and mitigated risks associated with the deployment of Grok. Officials from the social media app saying they have removed illegal content and are working with law enforcement. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour. Up next on the programme, shaking up global alliances.
On the Greenland issue, I disagree with the president. What we need to do is to bring down the temperature.
We live in an era of great power rivalry. The rules-based order is fading.
It's an endless accumulation of new tariffs that are fundamentally unacceptable.
When friends shake hands, it must mean something.
Up next, we'll catch up with the former House Financial Services Committee Chair, Patrick McHenry. Live from New York City this morning. Good morning to you all. Big week. Absolutely stacked week still ahead of us. We'll hear from the president in about 24 hours' time. He's got a big speech in Iowa. Look out for that on Wednesday. A Federal Reserve interest rate decision. And after the bell, we've got some earnings to get through. You'll get numbers from Microsoft and Meta. The day after that, we'll hear from Apple. Lots to look forward to. Equity futures so far this morning pulling back by just 0.2% on the S&P. We're down a third on the Nasdaq. On the Russell, we're down about 0.25%. Under surveillance this morning, a rupture in foreign relations.
On the Greenland issue, I disagree with the president. What we need to do is to bring down the temperature.
We live in an era of great power rivalry. The rules-based order is fading.
It's an endless accumulation of new tariffs that are fundamentally unacceptable.
The use of tariffs against allies is completely wrong.
When friends shake hands, it must mean something.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security.
He again has been able to take leadership on this issue.
The process of getting to that agreement has clearly damaged trust amongst allies.
No doubt, the rhetoric we have heard the last year is unacceptable for us.
So here's the latest this morning. World leaders emerging from Davos with the world order tested. President Donald Trump saying he'll hit Canada with a 100% tariff if the country becomes a drop-off port for Chinese exports. Joining us now is Bloomberg's Tyler Kendall. Tyler, is there an appreciation for just how offended American allies actually are at the moment?
Well, John, at this point, considering the White House's staunch threats against our allies, I'm not totally sure that we did hear the U.S. Treasury Secretary Scott Bessent in an interview over the weekend appear to temper the president's threats when it does come to Canada, saying that if they do not pursue a free trade deal, as the Canadian Prime Minister Mark Carney said over the weekend, then these tariffs wouldn't end up going into effect. Though we have to keep in mind here that the relation between Trump and Carney has long been strained, right? Carney largely campaigned on countering this White House when it comes to trade, and there has been mounting frustration between both of the sides amid a lack of progress on a trade deal. While, yes, a lot of the Canadian exports to the U.S. are shielded by the USMCA, there is still huge exposure when it comes to those sector-specific tariffs, particularly like steel. And that is why this escalation is likely previewing what is going to be months of positioning ahead of the renegotiation for the USMCA this summer. I spoke to one senior administration official over the weekend who told me that the U.S. is going to maintain the posture that this is only going to complicate matters for Canada going forward, that ultimately we're going to see more economic risk, they said, to Canada because their economy is smaller and less diversified, which brings us to the reason why President Trump is upset in the first place, because they are reaching out to those other trading partners like China. Though, just for quick context here, Canada does about 1/10 of the trade it does with the U.S. with China. So we're talking about a very small portion. This emerging deal is supposed to be a lot limited in scope. But John, to your question on whether or not this is materializing, the U.S. is realizing these deeper rifts, I will say it's not necessarily deterring our allies. I'll point out that today, Canada's energy minister is actually in India to pursue some more trade agreements there.
Tyler Kendall with the latest in Washington. Tyler, thank you. Thank you very much. We discussed this a lot extensively in the last week or so. Let's just park trade. There are legitimate criticisms of Europe to make, and we've had them extensively on this programme, and I think they're justified in many ways. We can talk about the style. OK, that's one thing, but the substance, a lot of Europeans might agree with some of the substance coming out of the US administration. Where the administration crossed the line in the last couple of days, and this is without debate, they crossed the line by questioning the involvement of NATO allies on the front lines over the last 20 plus years is a step too far. And I don't think there's significant appreciation on this side of the transatlantic relationship to what extent the Europeans are offended by some of the comments from the president in the last couple of days.
Keir Starmer, the Prime Minister of England, out of all the NATO countries that came to the U.S. when they triggered Article 5, by the way, the only time Article 5 has ever been triggered was after 9/11, and then you saw British troops in Afghanistan. More than 400 British soldiers died. Keir Starmer called it appalling and wanted an apology. Now, we did see the president take to Truth Social. Not sure it's done enough. You then came out and saw Giorgia Meloni, the Prime Minister of Italy, also talk about the fact that their sacrifices of these countries should be recognized. And they are not warming up to this language the president is using. And potentially this does cross a red line for them. And it's going to mean a lot more fraction going forward with the European Union.
Let's extend the conversation. Patrick McHenry, the former House Financial Services Committee chair, joined us now for more. Patrick, welcome to the programme. Allies have disagreements behind closed doors, and sometimes they spill out into public, and we've covered many of those disagreements over the last several years. This feels like it's something more than that. What's your perspective on things?
There's always a moment like this in every Trump administration where they say it will never be the same after this moment. And it largely goes back to what it was before. This should not be a surprise to the Europeans. President Trump, when he announced he's going to Davos, was going to control the terms of debate and the items discussed. And he, in fact, did that. Now, coming out of Europe, the offhanded comments the president made about Europe's and NATO's commitment post 9/11, that is something different. I mean, we have allies that put lives at risk in America's national security interest, their national security interest as well, but the sacrifice is real. And whenever you talk about the loss of life for our friends and allies or any nationality, that nationality will be deeply offended because it's their blood, sweat, and tears that was sacrificed, and it was their young men and women that went and fought and died. And so, that is obviously deeply offensive to our allies. But the larger discussion here, we have to step back one aperture and realize this is a shakeup, but not a permanent fissure or rupture.
But can this do any long-term damage?
Of course. Look, the Europeans and the world thought the first Trump election was a one-off thing, and they didn't need to take him seriously. Coming back the second time, a second administration, the world realizes this is something to take seriously. But they make a mistake in taking every one of President Trump's statements literally. And they have to get past the noise and get into the substance. That has always been the challenge with Trump's style, is that everyone hangs on every sentence and tries to take it literally rather than trying to understand what the president's going for. And I think that is largely what we're dealing with right now.
Do you expect any immediate blowback? Jonathan talks a lot about the fact that when the president was really jawboning, then Prime Minister Trudeau, calling him Governor Trudeau, you saw the country rally behind the Liberal Party, even though the Conservative was, in the moment, leading the polls, Poilievre. Now you have another truth from the president talking about Governor Carney, Mark Carney. Do you think there is going to be damage in the sense that the administration is going to force other populations to rally behind liberals instead of conservatives that they actually think they could probably work better with?
Well, imagine this. Would you have predicted on Inauguration Day that President Trump would have a better relationship with the Mexican government than he would with the Canadian government 1 year in? And look, Mark Carney is a different cat than his predecessor, has a different set of politics, a different set of strengths. And I think the president has to adapt to that changed reality. Frankly, we see in Canada's reaction, the immediate effect of the aggressive stance President Trump has taken is that we have fewer Canadian tourists coming south. And I think you see that in a rekindled sense of Canadian nationalism as a result of the president's tactics here. Look, I don't know how this will shake out, but clearly we have a massive trading relationship with Canada. It's a very important trading relationship that Canada has with the United States. We're a huge market for them. We do need to work something out. And I think we have to get past this very strong rhetoric from both sides and get to the reality of a better trading relationship, better trading understanding.
Patrick, it's always good to hear from you, sir. Thank you. Patrick McHenry there, the former House Financial Services Committee Chair. Patrick's right. We've had moments where we've all sat here and said something's changed, and then you've gone back to exactly where we were before. You mentioned Canada. I'm pleased you brought it up. We've talked about it a lot on this programme. A diplomatic spat became an economic problem. And my question walking away from last week is whether the diplomatic spat in Europe becomes an economic problem, whether the same kind of trends you saw emerge in the Canadian economy start to emerge out of Europe as well.
Well, actually, the #1 trending app right now in Denmark for free is an app that tells you what products are American-based so you can boycott them. That is trending right now in Norway, in Iceland, the Danes. They are actively trying to stay away. Now, these are just everyday consumers. They're going to the grocery store, looking up products, and they do not want to buy American because they don't like the rhetoric coming out of this White House.
That's a situation we all need to avoid. Question is, have we crossed the line in the last week? Futures right now on the S&P just about negative by 0.2%. Up next, we'll catch up with Amy Garr of Morgan Stanley with gold on a record-breaking run. Plus, Danny, has your morning movers, USA rare earth jumping 36.9% in the pre-market. 3 days, no losses on the S&P 500, but unable to avoid a weekly decline on the S&P just last week. Coming into Monday morning, we're down about 0.2%. No real drama here. On the Nasdaq, down by a third. On the Russell, we're down by a third of 1% also. We'll talk about this massive small cap run that we've seen over the last several months and whether this has got enough oxygen, given that so many of you are already expecting an economic boom, at least over the next couple of quarters in this country. Let's turn to the bond market. Very interesting week in the bond market. 2s and 10s pretty stable in the face of what happened in Japan. 10s are back down to 420. 2s at 358.36 going into the Fed meeting on Wednesday, and no change expected to policy just yet from the FOMC. The big towel was in the FX market and in precious metals. Last week, DXY posting the first weekly drop of the year, the worst weekly drop we've seen going back to May of last year. More weakness again this morning. We're down 0.5%. On the same week, gold, a rip-roaring rally last week, the biggest one since 2020, up by close to 9%. 8.52% higher, to be precise, and up again 2 percentage points this morning, blasting through 5K.
It's unbelievable, and all the banks have now having to look at where their price targets are, and they're like, "Oh, we need to reevaluate this." Goldman on Friday tweaked its year-end price target to $5,400 an ounce. The previous call, they blew past just the first 3 weeks of the year, $4,900 an ounce. Bank of America, Michael Hartnett, coming out saying, quote, "History is not a guide to the future, but the average increase in gold during 4 upward cycles was about 300% over 43 months, which means the gold price could reach $6,000 by spring." 6,000. That is just in a few months, according to Bank of America.
5K sounded nuts 18 months ago, and here we are. So who am I to question any of this? Right now, gold approaching 5,100 and higher by 2%. So that's the FX precious metal story. Let's turn to what's happening in Japan. Dollar yen down to 153.78. Dollar yen negative on the session by 1.2%. Intervention risk incredibly elevated going into the weekend and coming into this week. What kind of action could we see, and what kind of coordinated action could we see between Japan and the United States?
So basically, you have the New York Fed running these so-called rate checks, inquires about pricing, and that could precede direct intervention. While the market is taking this as potentially we will see that intervention, the Treasury Secretary spoke about Japan at length when he was in Davos, which is why a lot of people are reading the tea leaves and saying this is something potentially you can see coordinated between Washington and Tokyo. Remains to be seen, but this is something for sure the FX market is watching.
This is an important signal. The bond market pushing back and the FX problems. We talked about this about 30 minutes ago. Never mind the intervention. Japan has a debt problem. Let's talk about why we're here. We're here because Takaichi, in the minds of many, is going to push for some kind of tax relief, some kind of tax cut. And the market's pushing back. That's the problem you've got to address here in Japan. And to Ken Griffin's point, what you've seen in the last week or so in the Japanese government bond market should be a warning for everybody that when you take it too far, this market will push back.
She wants to spend billions of dollars of fiscal support in Japan, including things like waiving a sales tax on food for that minimum 2 years. And that is why she called these elections, because she wants to have her coalition have a very strong grip on power. And given the fact that she won, it looks like her coalition will do well, which basically means that fiscal impulse is coming.
For much of our careers, going back decades, for many of you sitting at home who have lived through many a cycle, the Japanese government bond market has been an anchor around global interest rates for a long, long time. Anchors away. There's no support anymore coming from Japan. What's intriguing is just how insulated the US bond market has been so far, given the rupture, the convulsions we're seeing in the Japanese debt market. Russ Kostrick of BlackRock noting the same thing about 30 minutes ago on this program. Can that continue? Is a big question in fixed income. As we count you down to the opening bell, let's get you some single names. The big movers out there in the pre-market. 3 hours away from the cash open. Let's catch up with Danny for more. Hey, Danny.
Hey, John. Everything that happened over the weekend itself would have been enough to say, wow, this year has been something, and that just adds on. So whether the intervention risk you're talking about, more odds of a government shutdown, threatening more tariffs on Canada, as you showed, it's playing through gold, with gold above $5,000. And that's sending the gold miners much, much higher this morning. Newmount, that's up 4.2%. Barrick Mining, that's up 3.3%. Both of those, when they open, it means they will open at new record highs after closing at record highs on Friday. A little bit of deal news, or a lack of a deal. There had been some earlier reports that suggested that Merck would be buying this company, Revolution Medicines. That deal has fallen apart, according to the Wall Street Journal. They could not agree on a price, but Revolution Medicine, the journal reporting, still might be a target for another company. But even so, those shares falling 22% this morning. To the upside, a different type of deal, USA Rare Earths, reporting from the FT saying that the U.S. government would be injecting support, taking an investment, a 10% stake in this company, and supplying them with $1.3 billion worth of senior secured financing. That deal could be announced as soon as today. Shares soaring for this small company, up 37.33% in the pre-market, John.
Hey, Danny, thank you. Thank you very much. The latest on that move, massive move in the pre-market. I've lost count. What number are we on now?
I literally was just thinking which number of company this is ranked in terms of U.S. government intervention. It's literally a half a dozen, and I'm sure there's a list of others they're going to continue in the next 3 years.
I know that Republicans are somewhat happy with this effort, and I understand why. We're trying to get some of these production off the ground in this country for national security reasons. I'm right there. I understand why, but caution this. You have to think about the kind of policy behavior that we're normalizing here in this country. And if you're happy with this kind of action because you yourself support the White House and the Republican Party, okay. But how unhappy are you going to be when you see a different flavor if the other party gets into power in a few years' time?
I've said this to Republicans when they give me the whole, this is about national security, which I understand. China has an absolute monopoly on rare earths and the processing of rare earths. And the United States needs that for the defense sector on top of the technology sector.
Without question.
But then you push back and you say, well, what if in 2028 there is a, say, President AOC? How would you feel about this? And then they get a little bit nervous and they're like, oh, yeah, we don't want to see equity stakes then. They're only okay with state capitalism if it's under their party. And if it's not under their party, they're probably going to call it something else.
What kind of policy behavior are we normalizing out of the White House? It's an important question. Let's get back to our top stories. On our radar this morning, the yen surging as the US dollar extends its sell-off. The greenback hitting a 4-month low on speculation the United States may help Japan. This coming after Prime Minister Takaichi warned that the government is ready to intervene. Elsewhere, the risk of a US government shutdown is rising. The Senate Republican leaders vowing to reject Democrats' demands to split off funding for the Department of Homeland Security, the threat following the fatal shooting of a US citizen by ICE agents in Minnesota.
Absolutely horrific weekend when it comes to domestic politics in America, but this is also going to have repercussions for potentially a government shutdown. A lot of people said we're not going to have a government shutdown until this weekend. And then you have Senate Minority Leader Chuck Schumer coming out with a statement vowing that he is not going to vote and he's going to make sure his caucus doesn't vote for the very long appropriations bill because it includes DHS funding. So that is why the odds of a partial government shutdown have gone right up.
Should we just sit on developments in Minnesota? Because they are so important right now. The president won for many reasons in the last election, but one of the big reasons was just how poorly the southern border was handled by the Biden administration. A lot of people have commended him for tightening that up as quickly as he had done. But it looks like he's losing, and losing on a policy that he won on just a couple of years ago because of the way this is playing out in one state.
Well, if you look at the polls, he is. Immigration right now is trending downwards along with his overall performance. If you look at what Nate Silver put out over the weekend, you could see that just trending lower because this is not what Americans, when you look at the polling, thought in their mind would be closing of the southern border. They were not expecting Americans to get shot in the streets while they were conducting some of these operations. The president did speak to the Wall Street Journal last night. We should note, 5-minute interview. He said, quote, we're reviewing everything, and we will come out with a determination. The administration officials have publicly defended the officer, but the president is looking likely in this Wall Street Journal interview that he wants a little bit more of a thorough investigation.
That's the latest on developments here stateside. A winter storm also dominating the headlines over the past 24 hours, hitting the East Coast, bringing heavy snow. The storm straining electrical grids and grounding thousands of flights. More than 1 million homes and businesses across the United States are now without power.
This is really scary when it comes to this storm. It's one of the biggest we've seen. It's once in a decade. It's pretty surprising. Actually, you and I made it into the studio this morning. No snow days for surveillance. When it comes to the flight cancellations, the biggest and the most flights we've seen canceled since COVID. Over the weekend, more than 11,000, and this morning, as of 1:30 a.m., 3,500 flights canceled, and that number is rising. Everyone needs to stay safe out there.
Stay super safe. I can tell you, coming into New York, the roads were not good at all. Let's turn to commodities. Gold smashing past 5K for the first time ever as traders pile into the debasement trade. Amy Gower, lead metals commodities strategist of Morgan Stanley, writing, we don't think prices have peaked. With geopolitical risk, positive signals from central banks and ETF buying, we highlight our bull case 5,700 for the second half. Amy joins us now for more. Amy, good morning. Just to clarify, is that the second half of this week or the second half of this year?
It's the second half of this year.
Amy, let's get into that call. We have moved so quickly on the precious metal. Have we got a new driver here, given developments over the last week?
Yeah, look, I think there's multiple drivers working together. So, of course, we should mention geopolitical risk and all of the uncertainty that we have at the moment. I think that is driving investors towards precious metals in particular, and especially given prices are then performing so well, I think that is providing additional price momentum. We also got a bit of dollar weakness the last few days, and that is always a tailwind for commodities, making them cheaper for non-dollar holders. And then I think while we're still in this, when will the Fed cut rather than if the Fed will cut, that's also a broader tailwind. But the key thing I think also has changed that's worth flagging is around central bank behavior. So we've always thought of central banks thinking about gold as a percentage share of their reserves. And of course, that means as gold prices rise, you would think that they would slow the pace of buying because the price is kind of doing the work for them. But we had something really interesting from the Central Bank of Poland about a week ago, saying they're now targeting 700 tons of gold, so an absolute tonnage amount of gold, which would imply about 150 tons of buying. So for context, Poland was the largest buyer already last year. This would be about another 50% buying on top. So if central banks are just thinking about having gold regardless of the price, then that could also keep that kind of structural buying at a higher level than we were previously expecting.
Amy, I understand countries like Russia and China that face sanctions threats wanting to make sure that they have this historical level of gold buying. Why a central bank like Poland?
I think it's part of sort of where do you put your reserves? And we've seen you've got the dollar sort of seeing a slightly declining share across the world, but it's not really clear what the other currencies are that can really compete against the dollar. So I think when it comes to central banks looking at their options, gold is there. It's sort of something that should hold its value over time, which I guess for a central bank, their key role is to sort of protect the value of their reserves. So if you are worried about currencies in general losing value, gold is your sort of your natural hedge there. And then I think Poland did cite specifically all of this geopolitical uncertainty as well. But we'd also highlight, say, we saw Brazil, for example, coming in September for the first time in about 4 years. So it's pretty widespread now, this buying.
There seems to be so many reasons why gold is just smashing it this morning. Can you give us what you think potentially is the number one driver?
Yeah, look, I think the price momentum is very important here. And I think given all of this geopolitical uncertainty, I'd say probably that is the number one driver in terms of the last week of price action. But I do think all of these other factors have set the scene for us to be here.
Well, Amy, speaking of momentum, let's talk about a different precious metal. Let's talk about silver. Got a 5% move on my screen on the Bloomberg terminal so far this morning. Can you just give us an idea of how big that market is and how easy it is to push around on any given day?
Yeah, so silver is much smaller than gold in terms of its kind of global traded volume, in terms of the market size on the screen and what you can move financially. It is a bigger market in terms of absolute tonnage terms, just because it's a lower value in terms of sort of annual production. But I think for what we're seeing on silver is it's slightly different to gold in that it's partly an industrial metal and partly a precious metal. And so you do have real users who need to buy silver. Arguably, nobody needs to buy gold on any given day. But if you have a factory that is dependent on silver to make solar panels or electronics, so there's a buyer out there that physically needs this metal. And so that has been a big driver over the last 4 or 5 years, pushing that silver market tighter and tighter into deficits. And then you've also got this precious metals angle of safe haven buying. And we're seeing that really accelerated last year and continues to this year. So when these two come together, when money flows into a silver ETF, they need to find some physical metal to underpin that. But that's largely been eaten up already by all of this industrial demand we've had. So that metal is just not there. And we're seeing this particularly in China at the moment. So China is trading at about a 15% premium, even to what we're seeing in London and in New York. And that's physical demand where the metal is just not available. If we go to London vaults, there is silver in there, but it's all kind of owned by these ETFs. It's not really freely available to the market. And I think that's why we're getting this squeeze.
Amy, this was really well framed. Appreciate the clinic. Amy Gower there of Morgan Stanley. So you've got the industrial metals trade, see it in copper. The precious metals trade, you see it in gold. Then you've got the best of both worlds right now, which is silver, up another 5%.
Silver, $109 an ounce today means its price is more than 3 times higher than it was a year ago. That is an absolutely stunning statistic when it comes to this precious metal.
Some major moves in precious metals again this morning. Let's get you an update on news worldwide with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. New York Mayor Zohran Mamdani vowing to use, quote, every option to prevent an aggressive ICE operation in New York City. The mayor also defending the city's sanctuary city policies, which allows cities to limit their cooperation with federal agencies looking to deport undocumented immigrants. China's top general is being accused of passing secret information about the country's nuclear weapons program to the United States. The Wall Street Journal reporting Zhang Zhujia is also accused of accepting bribes for official acts, including promoting an officer to the post of defense minister. The report goes beyond China's announcement on Saturday that it was investigating Zhang. And Chinese officials are telling the country's largest tech firms to start preparing orders for NVIDIA's H200 chips. Sources saying Alibaba, Tencent and ByteDance have initial approval for purchases. Alibaba and ByteDance earlier told NVIDIA in private that they are interested in ordering more than 200,000 units each of the H200. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. Up next on the programme, reshaping the Federal Reserve.
I know within 3 or 4 people who I'm going to pick.
I have a pretty good idea who I want.
I'll announce them at the right time. There's plenty of time.
I have somebody that I think will be very good, but I'm not going to reveal it.
That conversation up next with Michael Dada of Roth Capital. Stocks are down across the board. We're negative by 0.2% on the S&P 500. On the Nasdaq 100, we're down by about a third. Under surveillance this morning, reshaping the Federal Reserve.
I know within 3 or 4 people who I'm going to pick.
I know who I'm going to pick.
I guess a potential Fed chair is here, too. I don't know. Are we allowed to say?
We're going to be looking at a couple of different people, but I have a pretty good idea who I want.
Someone who believes in lower interest rates by a lot. I'll announce them at the right time. There's plenty of time.
I'll be telling you soon. No, I have somebody that I think will be very good, but I'm not going to reveal it.
So here's the latest this morning. A key week ahead for the Federal Reserve. President Trump set to announce his pick for the central bank's next chair as policymakers gear up for the first rate decision of 2026. Michael Dada of Roth Capital writing the incoming chair of the Fed will then inherit an increasingly divided and defiant FOMC. Michael joins us now for more. Mike, welcome to the show. It's good to see you. Let's talk about why you believe this Fed will be such an unruly Federal Reserve for the next Fed chair.
Thanks for having me on, John. Well, look, I think Trump is kind of overplaying his hand here. We're seeing pretty significant pushback with this Justice Department investigation on Fed Chair Powell, which is obviously a political ploy to put a lot of pressure on the next chair of the Federal Reserve. But Senator...
I think we've got a problem with that connection with Michael Dada of Roth Capital. Is he out in a chalet somewhere, skiing?
For
We're going to try and re-establish
so.
that. Look, the noise on the Federal Reserve, and hopefully we can reconnect with Mike and we'll continue the conversation. We've talked about this a few times. The perception, and perception is important. The members of the committee right now, and we've seen that evidently from the chairman of the Federal Reserve, Jay Powell himself, perceive there to be a threat from the White House that is a threat to their independence. And we've talked about that galvanizing the other officials on the Federal Reserve, which makes it difficult for whoever comes in to lead the committee and get everyone else to follow them. It's going to be very hard for the next Fed chair.
It potentially can be very hard to gain that consensus, unless maybe it's someone from within, like Governor Waller. But his name hasn't been thrown out as much as some of the others, Jonathan.
I understand we've reconnected with Mike Dada of Roth Capital. So, Mike, we can continue the conversation. Let's go with it. OK, I understand why this Fed could be a more unruly Federal Reserve. Does the market price the volatility within the Federal Reserve, or does the market price the outcome of that volatility, which means it's difficult to reduce interest rates?
Yeah, I mean, look, the market still gives the Fed a lot of credibility and is not looking for a huge political disruption. So, I think we're playing with fire here going down this path with a lot of political pressure on the Federal Reserve. So we'll see what happens. I mean, at least there's some pushback. Senator Tillis has basically defended Powell, saying forget any new appointees to the FOMC until this is resolved. And you have a divided Fed, and this is a Federal Reserve that makes decisions based on a consensus. So you don't just pick one member to lead the Fed and then assume that rates are going to go to 1 because you assume that's a good idea. So we'll see how all of this plays out, but I think the administration's really overplayed their hand here.
I'm glad you mentioned Senator Tom Tillis. He spoke with Jonathan, Lisa, and myself in Davos, and he talked about the fact that he is not going to let a candidate go through until this is resolved in terms of the DOJ probe on Jay Powell or the more than 340 days he has left until his retirement. Do you think the market is pricing in the fact that we can have Jay Powell be the Fed chair for, I don't know, another 300 days?
Well, I mean, look, his board seat doesn't expire until 2028. So if Fed Chair Powell is really worried about political influence on the Fed, he could stay on as a voter and deny the administration that board seat. So, they would have to use the expiring term of Governor Marin for the next Fed chair. And then, as I said in the quote, you've got a pretty divided and defiant FOMC. So that's just kind of a mess. But it also prevents, dramatic political manipulation of the Fed and pushing the Fed down a path where it's doing things it shouldn't be doing. Running it hot might sound very good in the short term, but let's not forget how the 10-year went from 50 basis points to 5%. That occurred on the back of an inflationary policy error by the Federal Reserve. So I don't think we want to repeat that exercise again.
Mike, do you believe there is upside inflation risk this year? And what's the source of that?
No, not really. I mean, I think that the Powell Fed has done a phenomenal job here in terms of the previous tightening and then easing by just about the right amount. The nominal economy has been super steady. Inflation expectations are anchored. So I think that they've presided over just almost a perfect, immaculate disinflation. And I think that continues this year. But we're playing with fire in terms of what the administration is doing, and they should really reverse course, in my opinion.
Mike, it's good to see you. My apologies about the technical disruption. Mike Dowder there of Roth Capital on the Federal Reserve. This from Torsten Slok of Apollo in the past few weeks. Covered it on the programme. I think worth repeating. The risk of overheating here. The list of tailwinds keeps growing. We're starting to worry about overheating in 26. Torsten Slok of Apollo just a few weeks back.
And he had so many reasons on that list, including the AI trade, the build out of those data centers. On top of that, we are in 2026. This is the year the United States will be hosting the World Cup. The tourism that's going to be coming in, the money that is going to be spent on that. He had so many reasons why potentially we could be overheating this year. And you have to think, potentially is that a concern for inflation?
I was so excited about the World Cup coming to this country this year. Just for right time, right place.
Ticket prices.
Return of Americana, great moment for the sport in this country as well. The scenes we've seen play out, the headlines we've witnessed in the past week or so, out of just one state. I just wonder how much perception is being shaped by that abroad, and how few people decide to actually come over and watch the games. Now, I hope in 6 months' time, we're all wrong about this. I hope the stadiums are full. I'll be one of the happier people sitting around this table to see that play out. I hope that's the case.
I hope so, too. I mean, right now, when you have the State Department talking about visa bans for a number of countries, especially a country like Brazil, but saying, oh, but it won't affect the World Cup. But if you're an individual, are you looking at what's playing out in America and thinking, I feel safe to go there right now from these countries? No.
Futures right now, negative by close to 0.2% on the S&P. Up next, we'll catch up with Sarah Hunt of Alpine Saxon Woods, Terry Haynes of Pangea Policy, Stephen Schork of the Schork Group, and Bob Michael of JP Morgan Asset Management. The second hour of Bloomberg Surveillance, up next.
The the U.S. economy is really growing fast.
The U.S. has been really an incredibly strongly performing market, strong economy.
Corporate health is excellent. Consumer health at the top end is excellent.
Diversifying away from America is impossible.
So if you look at the economy today, there's a lot of good short-term things.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures a touch softer. We're down by about 0.1% on the S&P 500. On the Nasdaq, we're down by 2%. The Russell down by almost 1/3. The big move in gold. Gold up last week by almost 9%. Up this morning by 2%. Up on the year by close to 18%. Gold through 5K for the first time ever. Lots of reasons for that. We'll get into it in just a moment. Going into this massive week ahead. Lots of earnings. We'll get that Wednesday and Thursday from big tech. Microsoft, Meta, Apple. A Fed rate decision coming up on Wednesday, and an address from the President of the United States tomorrow.
There's a ton, and potentially a government shutdown, Jonathan, by the end of the week, given what we heard from Senator Schumer over the weekend. When it comes to the Federal Reserve, there's no urgency either way. That's made obvious by Fed officials. What is going to be interesting, though, is a lot of developments have happened since we last heard from Jay Powell. And the Q&A at the press conference is going to be very insightful. 1, do you think it was political that you showed up to Lisa Cook's hearing at the Supreme Court? 2, what can you tell us about the DOJ probe? 3, do you plan to stay on past your chairmanship, to stay on as governorship? And I don't know if the chairman is going to offer any insight into how he's thinking about a number of these issues that are political, not monetary policy focused.
Base case would be he won't engage. Yeah. I would say I've lost some conviction around that base case, given how assertive he was just a few weeks back. That was a different Chairman Powell. And I wonder how willing he is to address some of those questions in the news conference this Wednesday.
Yeah, he might come out a little bit more forthright in how he's thinking, especially since the fact that he has showed up to Lisa Cook's hearing. And you heard from the Treasury Secretary saying that is Jay Powell that is politicizing the situation. He might talk about whether or not he's had phone conversations with members on the Hill, like Senator Tom Tillis, who says that he is not going to entertain the administration's next candidate until what is going on with the DOJ is basically figured out between Jay Powell. It's going to be an interesting next few weeks.
It's interesting looking at the market betting, the probability, all those things out there at the moment who have now got Rick Reeder in the lead, because they think that the other individuals are a little bit too close to the White House, and this is the guy that can probably make it. Speaking to the senator just last week, he said it's not about the man, it's about the process. And I just wondered to what extent here on Wall Street we're still underestimating just how long this could go on for.
Well, Senator Tillis was pretty factual in the sense that he said how the process works. Nothing can go through the Senate Banking Committee without his sign-off or until he retires. That's more than 340 days because he is retiring. And it was interesting. He said it doesn't matter about who it is. It's a process. Until this DOJ is wrapped up in this investigation to Jay Powell, I'm not going to move it forward. What's going on with Rick Reeder, though, is inside and outside the White House, you are seeing a lot of an embrace and warm tones about this individual. I definitely heard it at Davos.
See the things we do, the lengths we go to get to the studio to talk about the Federal Reserve here at Bloomberg Surveillance, getting through that winter storm just to talk about the Federal Reserve. Let's talk about this storm. Here on Wall Street, we're starting to put some numbers on it. This came from Bank of America and Aditya Bharve. The impact of Fern may drag down Q1 GDP by 0.5 to 1.5% quarter on quarter.
It's no surprise when you find out that this is the most flight cancellation since COVID, when the world literally stopped and there was bans on flights. Individuals cannot get to the airport. If you can get to the airport, it's too icy and the conditions are not safe for flights to take off. So we saw more than 11,000 flight cancellations over this weekend, and the number is going up this morning. As of 1:30 a.m., 3,500 flights were canceled. And if you're an individual that potentially works in the city, besides us, I think you're working from home.
It's pretty quiet. Let's put it that way in Manhattan, but it's always pretty quiet around 4 a.m. anyway. But I imagine it's going to be pretty quiet throughout the day ahead. We'll keep tracking developments for you through the hour right here on Bloomberg TV. Coming up this hour, we'll also catch up with Sarah Hunt of Alpine Saxon Woods as equities look to bounce back. Stephen Schork of the Schork Group as U.S. natural gas prices soar. And Bob Michael of JP Morgan Asset Management seeing no evidence of a Sal America trade. We begin this hour with stocks trading water as key earnings loom. Sarah Hunt of Alpine Saxon Woods writing the following. Earnings have been coming in fairly well so far, but are obscured by some potential policy changes. Sarah joins us now for more. Sarah, typically when things get crazy, you don't even bother trying to price it. And over the last week, things got pretty crazy. When you talk about potential policy changes, policy from where and who?
Well, if you just look at some of the edicts that have come out, if you look at things like let's go 10% on credit cards, or the whole Greenland thing that was happening that was so fast that went from this is going to be a big problem to no, this is not going to be a big problem. I think that those are the kind of things that get markets' attention, especially if you start looking at the credit card regulations and those interest rates, because the banking sector has had some strong earnings coming in that all of a sudden throws some potential cold water on what could happen there on the earnings front. So I think the concern would be that while you have a reasonably good earnings picture, which we think we do right now, that anything that looks like it's going to threaten that earnings picture is going to be problematic, because that is what is going to drive equity prices, especially from the highs that we're sitting at right now.
Well, Sarah, to that point, the backdrop for earnings is pretty decent. The backdrop for growth is even better for the year ahead in this country. Is there something about the policy posture in Washington right now that makes that sector less investable?
I think it's more just the frenetic changes in the ideas of what's going to happen next and how that's going to happen and what can be regulated and what can't be regulated. And the truth of the matter is there's a lot of things that would need to go through a much bigger policy question than just a sort of edict from above. But I think that the concern is just that you get these big idea changes and you're not ready to look at how that's going to impact earnings, and then you switch to another one so quickly that it becomes this sort of rolling information cascade. And I think that that's kind of can be an issue for markets, although many times they turn around and ignore them. So it's difficult to figure out which things are going to gain traction and which things are not.
Every day it seems like the market is dealing with another question mark now, a potential government shutdown. What does that mean potentially for the next non-farm payrolls report? Will we actually get data? Sarah, when you look at all of this and you're looking at all these questions, where do you want to hide?
I don't think it's so much about hiding as it is trying to figure out and stick with sectors that you think are going to do well in the long term. Almost, I mean, you can never say irregardless of what's going on outside, right? But you want to look at the things where you still see that growth in the AI build out. That is happening. There's a lot of ancillary things that go along with that. We know that we're going to need more power. We can see that higher power prices are driving what is going to be a larger demand for power. You can see that there are places where there's going to be growth. There's been a lot of activity in the biotech sector. There's been a lot of activity in some of those healthcare sectors where there's been some M&A activity. I think that what you want to do is look forward to what's going to happen over the next 3 to 5 years, because the noise can get very loud in the short term, but you're looking for longer term. You're looking for companies with really good balance sheets, really good cash flow. We want to see that those fundamentals on the balance sheet, they really do matter. And I think that especially with where we are right now in levels on the indices, you really want to be careful of your fundamentals.
When you look at the AI trade, Jonathan has been very good about bringing this up because a lot of guests have spoken to us about this. How important is OpenAI as a litmus test for AI this year?
I think that's a big question. And I think that there's some real questions about what's going on with the financing there. And I think that that's one of those things that is going to be it either is going to be a bellwether or it's not. And it's hard to tell early on because there's so many other things going on. And there are reasons that you could call that particular issue something that is only matters to OpenAI as opposed to mattering to the entire infrastructure or the entire sphere. But it's going to see anything that's really bad that comes out of that is definitely going to give investors a scare, I would say. So I think that it's something to definitely keep an eye on.
Sarah, do you think that's why people are taking more comfort and looking at, if I dare say, an equity haven trade at the moment seems to be small caps? The outperformance of small over large so far this year is notable. We've got the S&P up by around 1% and small's up by close to 8% on the Russell 2000, Sarah. And I just wonder if some of these themes, forces that we're discussing right now, policy risk out of the White House, speak to the fact that some people are just looking elsewhere to smaller companies that might not be in the firing line.
I think that there's also been, we've been talking about, or investors have been talking about a catch-up trade in small caps for a long time. And I think that the concern that happened with the small caps when they started to rally a couple of years ago was really much more concerned about a U.S. recession and how that was going to impact small caps. I think that I wouldn't say that it's 100% taken off the table because you can never say 100%, but I would say that the idea that we were running into a recession is less of a problem right now. That's beneficial to small caps. People are looking for value because they've seen how much the multiples are higher in the larger cap spaces. So I think that there is a combination of things that are going on there. One, better feelings about the U.S. economy, better feelings about what's going to happen in earnings in general, and a valuation gap that has been fairly substantial. So I think that people are looking for value in markets. They always do. And this is someplace where they're starting to find it right now.
Well, Sarah, let's pick up on point one. I think it's the most important point. The re-rating of the outlook for U.S. growth. And it's been re-rated quite dramatically. When I look at notes from Torsten Slok of Apollo talking about overheating, and I'll have a similar conversation with Morgan Stanley a little bit later this morning, Sarah, that is a well-understood story now. How well priced is that story in equities?
Well, there's a give and take with that, right? Because if the economic picture is that much better, then it sort of poses the question of why we need to be cutting rates, where the technology sector is still looking, well, the market is still looking for a couple of rate cuts this year. I think that there's going to be some tension there because, yes, I actually do see that the economic picture looks pretty good. And so that begs the question of why we need to cut rates, which gets into the whole problem that the White House is having with the Federal Reserve. So there's a lot of different tensions there, but I do think that the U.S. looks pretty good relative, especially to the rest of the world, but also just relative in general to the last couple of years. You have some things that have gotten a little bit out of the way, and you do see some reasonable employment. You see some good numbers on the economic front, and I think that that's just going to help equities in the U.S. perform better.
Sarah, you don't sound like someone who's part of the Sell America trade. Is that accurate?
Yes, that's accurate.
So you're saying sticking with the United States, especially when it comes to the economic backdrop. When it comes to your last point just about the Federal Reserve, basically, do you now, when you look at some of these economic projections, do you now basically map in no rate cuts from this Fed?
Well, I think that the expectation on rate cuts and the reality of rate cuts is not really matched up very well in the last couple of years, because if you start out every year, I mean, we're not starting out this year this way, but if you started out every year in the last couple of years expecting some major number of rate cuts, and we haven't actually gotten them because the economic data has been pretty decent. And I think that that's going to be the big story of 2026 on top of another couple of things. If we don't see inflation, you can say, okay, if you needed to get some rate relief, you could have it. But if you see very strong growth, it's going to be harder to justify that. And I don't see how all of this noise around the Fed helps that in any way, shape, or form, because no matter what happens, it's going to be discussed as politicized. But I think in the end, the U.S. economy is doing pretty well. And it's hard to see how that is majorly impacted in the near term in the same way that you've got some of the issues with other kinds of slowdowns in Europe and other places. So I think that the U.S. is looking pretty good right now. And I think that the consumer is looking and acting pretty good right now. So we'll see how that plays out as we get through the year. And we do have to be concerned about inflation popping back up because power prices are higher. And even though you don't have as many inflation drivers as you had before, there are still some in the system. So I think that that's another reason where cutting rates might be a little bit difficult to justify.
We'll discuss those power prices later this hour with Stephen Short. Looking forward to that. Sarah, good to see you. Sarah Hunt there of Alpine Saxon Woods. If you're just joining us, welcome to the programme. Futures were negative by a few tenths of 1% on the S&P, now just about unchanged, almost completely flat on the S&P 500. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg brief. The US East Coast trying to get back to normal after yesterday's massive snowstorm. The storm causing the most flight cancellations since the COVID-19 pandemic. According to FlightAware, more than 3,600 flights were cancelled as of this morning. Elsewhere, OPEC Plus sticking with the supply pause. Delegates telling us here at Bloomberg the group is currently expected to maintain oil production levels when they meet on Sunday. There are no signs it needs to adjust supply due to events in Venezuela and Iran. And finally, BYD aiming to increase overseas deliveries by nearly 25% this year, targeting 1.3 million sales outside of China. Strong demand abroad helping BYD overtake Tesla in 2025 to become the world's largest EV maker. How many of those cars will be sold in Canada alone over the next few years?
That's what I was thinking, obviously, because this is at the crux, really, of this concern between Ottawa and Washington right now. And we've seen what BYD has been doing to Europe. Going in there, massive investment, and it's, as you say, it's overtaking Tesla.
Commerce Secretary didn't hold back last week in Davos, Switzerland. It's going to complicate negotiations over USMCA later this year.
USMCA, those negotiations are going to be incredibly challenging, especially when the President of the United States is now calling the Prime Minister of Canada Governor Carney, like he did with Justin Trudeau.
It didn't help last time, did it?
Nope.
See if it helps this time. Up next on the programme, tensions rising across the aisle.
Maybe go to another city and let the people of Minneapolis decide.
We don't stop this in its tracks. People being killed simply for exercising their First Amendment rights is going to be a regular feature in this country. That should unite Republicans and Democrats in Congress.
That conversation up next with Terry Haynes of Pangea Policy, live from New York City this morning. Good morning. Two days away from a Federal Reserve decision here stateside, equities into that just about unchanged on the S&P 500, slightly lower through a very, very volatile trading week last week. The Nasdaq 100 down by 0.1%, the Russell down by 0.1% also. Under surveillance this morning, tensions rising across the aisle.
If the mayor and the governor are going to put our ICE officials in harm's way, and there's a chance of losing more, innocent lives or whatever, then maybe go to another city and let the people of Minneapolis decide.
We don't stop this in its tracks. What you are seeing in Minnesota, people being killed simply for exercising their First Amendment rights, is going to be a regular feature in this country. That should unite Republicans and Democrats in Congress.
So here's the latest this morning. Senate Democrats vowing to oppose a government spending bill unless funding for the Department of Homeland Security is split off. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John, good morning. Well, a senior aide to Democratic leadership tells me that Senate Minority Leader Chuck Schumer says that he has the votes to potentially block this spending package, which could risk a partial government shutdown this Friday, which is the deadline for the full appropriations process to ultimately play out. If we look at the math here, Republicans need 7 Democrats to get on board with the spending package as it stands. And we've already started to see some of those Democrats that supported Republicans last time around start to peel off when it comes to their support. If we take a step back, the Senate is right now considering 6 spending bills that would fund the government for the rest of the fiscal year. One of those in part funds the Department of Homeland Security, and Democrats now want to see some of that funding stripped out. The issue with that, though, is that any changes to the broader spending package would have to get kicked back down to the House and the crowd of Washington until February 2nd, which means that they would have to come back in early, and we're already starting to see some issues and delays on Capitol Hill related to the weather. There are also big questions here about whether or not this could reverse some key and hard-fought wins for Democrats in the spending package as it stands. They were able to reverse some of the Trump administration's spending cuts to foreign aid, for example. Plus, we have to keep in mind immigration and customs enforcement received a whole lot of funding under the One Big Beautiful Bill. So others are raising concerns that this is actually going to impact other agencies under DHS and not ICE, such as FEMA, as just one key example here. So there's going to be a lot of negotiation as this goes forward, and we'll have to see what ends up happening, John. It is our understanding that Senate Republicans have reached out to Democrats as we're starting to see some growing unease among the GOP when it does come to President Trump's immigration crackdown, but they're really more calling for investigations to happen rather than impacting any of the funding that's currently under consideration on Capitol Hill.
Tyler Kendall down in Washington. Tyler, thank you. To build on some of that, Terry Haynes of Pangea Policy joins us now for more. Terry, I'm going to kick it off by asking for a projection, a forecast, the call. Where are we going to be by the time we get to midterms at year end?
By the time we get to midterms, I think this will be an important aspect of things. I think what you end up with today is I think you end up with a continued Republican Senate. The map is just not very good for Democrats. And also, I think anybody that tells you, as I've heard on your air in the past, that the Democrats are projected to pick up this many seats or that many seats, I think is way, way over their skis. You have a situation where there's about 10% of the seats that are open right now. We don't even know who the challengers are in a lot of those seats, and yet people are already projecting Democratic gains or Republican holds. I think what you got is a situation here at the bottom line is where you have a very small Republican majority in the Senate, and whether or not there is a Democratic majority, it's going to be tiny. And a lot of that depends, a lot of a Democrat's pitch depends on how electable their candidates are. if they end up with a lot of Jasmine Crockett-like candidates in the House, their odds go down substantially.
Terry, there was a shocking incident when it comes to the deadly shooting in Minnesota this weekend. How do you see Congress pushing back against some of the rhetoric we saw in the White House over the next 24 hours or even the next week?
Well, I got to say two things. One, both institutional. One directly on Congress. Look, John Kennedy used to joke, President Kennedy used to joke that his Pulitzer Prize winning book, Profiles in Courage, was a very short book for a reason. And that book was about congressional bravery. What you got here is, Congress is lazy. And that may sound uncharitable to people who are running around like crazy, dealing with their constituencies and their jobs. But Congress is not doing any of the oversight that it needs to do on ICE or 100 other things, frankly, to make sure that these things run smoothly. Congress has had a huge role here. It has not exercised it at all. Republicans or Democrats. Democrats could have months ago been agitating for hearings, changes, whatnot. And now we are where we always are, which is nobody's done their jobs on oversight. So now we're going to have hair on fire, last minute spending battles. That's irresponsible for the public. The second thing, frankly, that's irresponsible for the public is to have state and local government officials talk as if they're equal partners or that they can stop things that go on in the federal government. Not to put too fine a point on it, we had wars over this. This is a federal government policy, good or ill. And what they need to be doing is working a whole lot more constructively than they have been too. There's an awful lot of people here who are contributing to this bad situation, and they all need to have a little more humility and stop, frankly.
Terry, you talked about Congress, you talked about state and local officials. You haven't mentioned the White House, which some officials in the White House are calling the individual, the American that was shot, a terrorist. What's your assessment of how they are handling this situation right now?
Well, the short answer is badly. I started with Congress and the institutions because you asked me about them. But they are, they're doubling down on things that need a lot more subtlety and a lot more tact. And I think when the White House has lost the Wall Street Journal editorial page, I think it ought to sit up and take some notice and understand that they need to be doing things substantially differently, whether it be retraining, whether it be just adopting a different posture anywhere that they're trying to enforce immigration policy. That message, I think, is going to take a little bit of time to get through. I think the Senate, frankly, has a big role to play this week in that because it's going to be on a bipartisan level, I should say. They're going to be agitating for a lot of changes, and the White House would be wise to get in dialogue with those folks and come up with some consensus. You were right earlier this year calling for the potential of a government shutdown. When it comes to how the White House deals with it, do you think the president is going to have a shakeup of his cabinet? I think it's a little bit too early for that, but at the very least, Homeland Security Secretary Noem has got some questions to answer about this. A lot of people will applaud her desire to strongly defend the ICE folks wherever, what they're doing and how they're doing it. At the same time, I think leadership takes a little bit of tact. I think it's a little bit too early to assume that cabinet secretaries may topple, but there's a lot of people, Noem among them, I think, who are being looked at a whole lot warier by others in the White House than they were a week ago. Those questions certainly being asked this morning. Terry, it's good to see you. Thank you, sir. Terry Haynes of Pangea Policy. Up next on the programme, Stephen Schork of the Schork Group. With natural gas prices surging, plus Danny with your morning movers, mining stocks rally as gold hits all-time highs. Had to double check this. The first back-to-back weekly loss on the S&P 500 going back to June
of last year. Just a small one last week, but still a weekly loss down by about a third of 1%. This morning we're down by a tenth. On the S&P, on the Nasdaq down by 0.2. The standout last week was just how flat the bond yield curve actually ended the week. Week to week, 2s, 10s, 30s not doing much. 10s this morning at 421.33, yields down by around a single basis point. I think you have to think about the backdrop here, the convulsion we saw in the Japanese debt market, and yet 10s in America are still round 420. Let's turn to the big moves that we've seen develop in the last week or so. In fact, the last several years. Gold, explosive move higher, up by 2% through 5K. Silver, up by 7%. Amy Garrett of Morgan Stanley on the program in the last hour. Absolutely fantastic. Pointing out that you've got the industrials trade in copper, the precious metal story in gold, and the best of both worlds in silver.
And also, she was pointing out that when it looks at central bank buying, which has been historical really since Russia's invasion of Ukraine, I was struck that it's not just the Chinese that are doubling down. It's central banks like Poland that are wanting to double down on making sure they have enough gold. And then you look at what Bank of America put out over the weekend. Michael Hartnett talking about 6,000 by spring. If you were on this desk trying to analyze what's going on in this space, how do you even have a price target? I remember when this moment was the price target.
It's just flying, Annmarie. Up by more than 8% last week, up by close to 16% year to date, I think.
Last night, when I saw the move and I was tweeting about it, you know what I thought about? Treasury Secretary Scott Bessent
Biggest position, right?
Would have made a ton of money had he not gone into the administration.
I believe it was one of his core positions in his fund.
It was his biggest holding in his fund.
Yeah, we should ask him about that one.
Yeah, next time he comes on.
Get his thoughts. It's working now, that's for sure. As we count you down to the opening bell about 2 hours away, let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Here's the equity market consequence of that. Newmont, Barrick Mining, both of them surging this morning, up 4.5%. For Newmont, 3.7% for Barrick Mining. Both of them closed at a record Friday, so they are well on their way to hit another record today. Elsewhere, there is a Reuters report that NVIDIA has chosen Samsung Electronics to provide its latest digital memory chips. Micron is one of the biggest competitors to Samsung Electronics, so the fact that it didn't get the nod means that those shares are down 1.2%. It's also had a rip-roaring rally, so it is sensitive to those drops. Finally, ending things with Baker Hughes, the oil, gas, and services company, reporting earnings that beat. It was expected to be a very sluggish environment because less spending on oil and gas. Even so, they had a record 2025, a positive outlook. There are questions around Venezuela and whether they will be participating in that rebuild. And as fate should have it, Matt and I will be speaking to the CEO around 10:30 a.m. this morning. So we will ask him those questions, John.
Danny with the update. Danny, looking forward to that. Thanks for joining us. On our radar this morning, Treasury Secretary Scott Bessent saying Canada will face 100% tariffs if it makes a trade deal with China.
The Canadians a few months ago joined the U.S. in putting high steel tariffs on China because the Chinese are dumping. The Europeans also have done the same thing. And it looks like that Prime Minister Carney may have done some kind of about-face.
The Canadian Foreign Minister saying the nation won't be derailed in its efforts to diversify trade away from the United States.
I think that's an important coming out from Canada. They're not looking for a free trade agreement with Canada, but it was peculiar that before he made really that provocative speech in Davos, you had Mark Carney actually go to Beijing and talk about strategic new partnerships. That speech, I think, was the standout speech of Davos this year. And what I found also interesting on the final panel of the week, Christine Lagarde was asked about it, and she said...
She disagreed.
She disagreed. She says, I don't quite agree with Mark. As you know, they're on a first-name basis. The Prime Minister of Canada, he doesn't see this being a rupture.
Isn't it refreshing that the virtue signaling at Davos is out and the mask is starting to come off and people are just speaking their mind and disagreeing freely? Just a little bit more anyway.
So you were there last year. I was at the inauguration, but the prior year when I was there was a ton of virtue signaling, and I got the sense in 2024 everyone was just so scared of the U.S. upcoming election. This year it felt like everyone was willing to say what they wanted to. And I think that was pushed by the President of the United States because of his attacks on Greenland, which really, I think, galvanized the Europeans to fight back.
Let's see if we see more of that in the year ahead. Elsewhere, we've talked about this move in the stock market this morning. The White House planning to invest $1.6 billion into USA Rare Earth. The Trump administration will take a 10% stake in the mining company. The announcement could come as early as today. That stock is higher in the pre-market by 15%. Elsewhere, big tech earnings kicking off on Wednesday. 3 of the Mag 7, Meta, Microsoft, Tesla, all reporting after the market close. Apple set to report after the bell this coming Thursday.
So it's going to be about Apple is actually the earnings call. What does Tim Cook say? First off, I saw him in Davos. He clearly had a lot of interactions with the administration. Then there was this report that there was almost this private viewing of the new Melania movie about the First Lady. And the NYSE CEO, Lynn Martin, who we spoke to at Davos was there. And also Tim Cook was there. And it comes at a time when corporate America, at least the ones that are based in Minnesota, like Target, Best Buy, Land O'Lakes, Cargill, General Mills, are pushing back on this administration. And they want some clarity and they want peace in this state, given what has been going on with ICE and Border Patrol.
We called Tim Cook the diplomat in the president's first term. He played the politics really well. This time around, relative to, say, Jensen Huang, seems to be on the outside looking in. Is that what the developments of the last few days are about for him?
No, I think Tim Cook has once again really reasserted himself as potentially the key diplomat. Now, I don't know if he's running policy the same way you'd think Jensen Huang is, because everything Jensen Huang has wanted for NVIDIA and the AI space is happening in this administration. But Tim Cook, very close to the sun right now.
Apple right now in the pre-market higher by around 1%. Let's turn to the weather. What a storm over the weekend. A powerful winter storm blanketing much of the US East Coast with heavy snow and sleet yesterday. New York, New Jersey and Connecticut are all under states of emergency, with their governors warning people to stay home if possible. New York City Central Park seeing 10 inches of snow. For the latest, Bloomberg's Miles Miller is there and he joins us now for more. Good morning, Miles. What have you got?
Hey, good morning to you. Yeah, and you can tell that nearly a foot of snow fell here, because if you walk around Central Park, you see people out here with the dogs and all of that. I mean, it is really tough getting around. Yeah, the city seeing in some parts over 12 inches, over a foot of snow that fell yesterday. And it's not just the snow that's of concern, it's the Arctic chill after, right? We are expecting to have a week below freezing, which means that all the snow that fell before it gets off the ground by melting or by pushing it away, it's going to be really tough getting around. That is what played into the decision to close schools today. Obviously, a lot of New York City businesses closed as well. And as you make your way through the streets, you can really tell just how slick it is. And, you know, every bit of this snow, of course, is going to stay frozen where it is. Of course, the mayor yesterday taking pains to talk about the New Yorkers who died as a result of these cold temperatures. One of those New Yorkers, homeless in Queens, dying in a local park. I mean, these conditions are such that they had to stop New Jersey Transit, and it is not even back up and running this morning. So a lot of these people who are commuting to Wall Street North, of course, having issues this morning, most of them probably going to be working remotely. The big challenge is going to be what to do with all of this snow. And what you usually see in New York is that they get these snow melters, dump all that snow in, and then it becomes water and goes straight into the drains. But it's going to take quite some time. In parts of this city, as I said, you saw 12 inches, you saw 13 inches of snow, and there's really not much to do besides just playing it, take your dog out in it and have some fun. Of course, the schools here in the city are closed, and for good reason. Buses would not be able to make it in this snow, but it is beautiful here in Central Park. I mean, picturesque, and I've seen some snowmen. I did not see a sled, and so I'll leave that to the experts, and I'll just stand here and continue to tell you about the conditions.
Well, it looks like you're enjoying yourself, Miles, so thanks for taking a beat and taking a break from your very, very busy morning. Miles Miller there in Central Park this morning.
You can't go out and build a snowman, though, if the mayor has decided that classes will pivot to online instruction. I have a problem with this because I grew up in New York, and you get so excited when you see your school district across the banner of the TV screen. And if you miss it, you have to sit in front of the TV, and this is a morning where you're allowed to watch TV in my house because you need to know whether or not school's closed. And school's closed, that's it. You're outside sledding, snowman building, shoveling elderly individuals, a sidewalk to make some money.
Yes.
Then you have hot chocolate. All of this is being ruined by remote learning. I'm sorry. It had to be said.
I almost misheard you. I thought you said shoving elderly individuals, but shoveling their driveways. OK.
Yeah.
Appreciate the clarification. Let's talk about the energy system. US natural gas jumping almost 20%, topping $6 for the first time in nearly 4 years. Joining us now, Stephen Short of the Short Group. Stephen, welcome to the programme. Can you just sort of frame for us the amount of pressure that's been put on the energy infrastructure in this country in the last 24 hours?
We're at unprecedented levels right now. And what was really interesting was that 2 Fridays ago, the Friday before the MLK long holiday weekend is just how complacent the market was. And now the market is paying for that complacency. So let's frame this out now. So 2 Fridays ago, we had the weather forecast that we saw extreme heating demand in Chicago, your largest gas furnace market, spreading all the way east up into New England, an area that was going to cover major production regions, Appalachia, which accounts for about 1/3 of U.S. production of natural gas. And yet, even with that known out there, the market was completely complacent. On January 16th, spot gas traded within 0.6 of a penny of $3. March gas, the last winter contract, traded at a discount to April, a spring contract. And most importantly, realized risk was higher than implied risk. That means to say that options traders were discounting this event. Now we come into the weekend, the MLK weekend, the weather forecast shifts. Now all that deep freeze goes further south, all the way down to Texas, Louisiana. So now 3/4 of U.S. production is now under stress. So you're looking at a market that was completely complacent at the coldest time of winter, and now they are scrambling for BTUs. What we saw today is PJM, the largest grid operator, went ahead and told utilities, you have to secure your gas supply, not just for the normal 1 day ahead. They have to go ahead now and secure it for 1 week ahead. So they are now forcing utilities to buy gas at the worst possible time, and utilities are paying up for that gas.
Why did they discount this event so much, Stephen?
And that's a great question. Now, historically, if we look back since the NYMEX started trading natural gas, the contract in 1990, historically, by this point in the winter, we've already seen the high price for spot gas. Typically, we see the highest price paid in about the first 2 weeks of December. And this is generally because we go into the winter, you have a run-up, we don't know what the winter's going to look like, but by December, you have a feeling of where we're going, where supply is, where demand is, and then prices tend to drift off through the winter, even during cold winters. So the market was extremely overconfident in history repeating itself, to the point where large institutional investors, when you look at the Commitment of Traders report, under the category of other reportables, their position right before this cold front was they were short 2 NYMEX contracts for every 1 contract they were long. So they were extremely vulnerable. So you have large speculators that were completely just underwriting or just not assuming this was just going to be the event it has turned out to be. Now that we have the weather forecasts coming out, not only is it cold now, the deep freeze is here. If you look at the NOAA chart going out to the 3rd week of February, what you're seeing now is cold sticking around from Chicago out to the east. So this cold doesn't look to be going away. And this is very important because, as I said before, last week, they were undercounting the risk in the February contract. Well, the February contract expires Wednesday. There's this automatic assumption, because February is trading at such a large premium now to the March contract, which turns prompt on Thursday. There's an assumption, oh, well, when the cold passes, the market's going to come crashing down. Don't count on it, because look at March. They're now looking at realized risk, historical volatility, what we've actually seen this market price variance, as opposed to what options traders are now pricing. They're still underpricing a weather event for the March contract. So we're certainly not out of the woods at this point.
That's a big move, Stephen. Appreciate your time. Stephen Schork there of the Schork Group. Stay warm, sir. It's good to see you. Front-month futures above 6 for the first time since December 22. That is a major move.
Historic rally. And Stephen says that this is not going to crash in February. This is going to continue, what he thinks, in March. And you already see the premiums being paid up by the industries. What does this mean for the everyday consumer? Higher prices potentially on electricity bills.
Yeah, things are getting expensive and getting even more expensive. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg brief. A massive winter storm hitting the US East Coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. More than 1 million homes and businesses across the US losing electricity. Elsewhere, Senate Democratic leader Chuck Schumer vowing to block a massive spending bill unless Republicans strip funding for the Department of Homeland Security. Schumer's announcement coming after an ICE agent shot and killed a U.S. citizen in Minnesota during protests this weekend. And finally, Samsung is close to getting certification from NVIDIA for its AI memory chip HBM4. Sources telling us here at Bloomberg the company entered the final qualification phase and is preparing for mass production in February. And that right there is your Bloomberg Brief. Up next, the return of the Sal America trade.
I would kind of describe it as a quiet quitting of U.S. bonds.
Diversifying away from the U.S. and also from the dollar is a quite dangerous bet.
If your fiscal house is not in order, the bond vigilantes can come out and extract their price.
Up next, we'll catch up with Bob Michael of JP Morgan from New York City. You're watching Bloomberg Surveillance. Here's a snapshot of the price action so far this Monday morning. Good morning to you all. Equities are down by about 0.1% on the S&P, down 0.25 on the Nasdaq. Bond yields just a little bit lower, down a basis point on 10s to 4.21. Under surveillance this morning, the return of the Sal America trade.
I think there is going to be some marginal move away. I would kind of describe it as a quiet quitting of U.S. bonds.
Diversifying away from the U.S. and also from the dollar is a quite dangerous bet.
The US bond market is still the most liquid market in the world, and it is still the closest thing to a risk-free asset that there actually is.
If your fiscal house is not in order, the bond vigilantes can come out and extract their price.
So here's the latest this morning. Treasury volatility fading after geopolitical tensions triggered a massive sell-off in US government debt. Bob Michael of JP Morgan Asset Management writing, we do not see evidence of a Sal America version 2.0 trade. Bob joins us now for more. Bob, welcome to the program. We used that phrase massive sell-off. It lasted like 5 minutes and it wasn't that large. The massive sell-off was actually in the Japanese debt market. And Bob, this morning, I'm more intrigued by how stable the bond market is, not how vulnerable it is. It's impressed me how stable it's been, given the convulsions we've seen in places like Japan. Bob, what explains that?
Good morning, John. When I look at the bond market, I think it's about as perfectly priced as you could have a bond market. Look at the 2-year. It's right at the Fed funds rate, which is perfect. Look at the slope out to the 10-year. It's 50 to 60 basis points. That's textbook. Look at where we are in the U.S. economy. We're gliding along at trend, maybe a little bit above trend. When you look at credit spreads, they're pricing that in. I don't know what more we could ask from the U.S. bond market. I like it here. I hope the Fed stays on hold. This will give investors plenty of opportunity to get into a bond market that's fairly priced with a lot of yield in it.
So, Bob, it depends where those investors are coming from. Because, yes, we haven't seen the Sal America trade in the bond market, but we've seen it in foreign exchange. Bob, how do you consider the moves we're seeing in FX with your approach to, say, fixed income?
Well, this is a very different FX market than March to August of last year. March to August of last year, we were working with our non-U.S. client base nonstop, thinking about alternatives to dollar exposure. We're not seeing any of that right now. Yeah, there's discomfort with U.S. policy. There's some dissatisfaction. But in the end, our client base is looking at the breadth and depth of the U.S. markets and deciding they want to be there. The kind of movements we've seen have been market participants pushing FX around. That can only go so far.
Bob, what do you make, though? And I know it's small, but there are some countries that want to divest away from the United States, including dumping treasuries. If we have more geopolitical or political risk from this administration, can you see that becoming a trend?
It's possible. I think what we've seen so far can be politely termed as decorative relative to the breadth and depth and size of the U.S. Treasury market. I think the Treasury and the administration would work very closely with the holders of large Treasury positions. So I'm not concerned. Listen, for several years now, market participants have been looking for an alternate reserve currency to the U.S. dollar. You're seeing that in gold now. It makes sense. But you know what? We're sitting on a diversified bond portfolio. little bit of investment grade and high yield that's yielding 6%. Gold's got to go up 0.5% a month from here. Otherwise, you're better off in bonds.
Gold right now is up by about 2%. It's in a massive move over the last 4 years or so. I think, Bob, it's worth, every time we have this conversation about selling US fixed income, it's worth pointing out that overseas holdings of treasuries at the back end of last year hit the highest on record. Bob, I understand where the fear is coming from, and we can get into that now. The fear is coming from this idea that maybe some of the money that was traditionally invested into US assets will go home. And not just because of what's happening in America, but because of what's happening domestically elsewhere. Bob, that's why Japan's important here. The great repatriation trade that people have been talking about over the last 12 months. Bob, any sign it's developing? As yields in Japan get to higher levels, is the money coming back home into JGBs?
So last Monday, while you guys were on a skiing jolly, I was back at the coalface, a lot more worried last Monday than I am this Monday. I feel there's some sense of calm that's been restored to the markets. So I can live with where yields are in Japan currently. When you look across the global spectrum, it's hard to find fiscal discipline anywhere. Of course, that's going to worry some central bankers. Of course, that's going to worry bond market participants. What we've seen in Japan is a wake-up call that bond vigilantes are back. There's only so much that we're going to put up with.
What is it that's unique about Japan, Bob, where they can live and thrive? What's unique about that particular market that is going to keep elsewhere insulated?
Well, it's been off on its own for coming on to 30 years now. It lived with zero and negative interest rates for a long time while the rest of the world went through the normal cyclical pattern. It's heavily controlled by both the MOF, the Bank of Japan, and the city banks. So there are things that can happen in Japan that can compel buying of the long end of the curve to stabilize things.
Bob, Michael, just before you go, was Jamie Dimon also on a ski jolly last week? Just one clarification. Or was he working?
Ooh, savage.
He's the hardest working banker I know.
Of course he is. Well said, Bob. I'm just there for you in your corner, making sure you say the right things. Bob Michael of JP Morgan Asset Management. Bob, thank you.
It's interesting how, of course, we, the journalists, were busy skiing, but of course, the CEO of his bank is very busy, having very important meetings, telling off. You know, he was kind of telling off Washington in a polite way, but he did his, talking to of the policymakers.
Bob's point about Japan last week was of concern, I think, for Japanese policymakers, and I'm not sure they've put that concern to bed just yet.
They haven't. I mean, they have a snap election, and they're going to shore up their grip on power, and you're going to see a lot of fiscal impulse. You know who else was nervous what was going on in Japan last week? And you heard him talk about it at Davos, the Treasury Secretary.
Yeah. Which is why some people are thinking about joint intervention, possibly. At least that's what's keeping things settled this morning, with dollar yen back down by what? We're negative 1%, back down to about 154 this morning.
Right. When the New York Fed comes out and does these rate checks of individuals who might want to buy, that is basically the precursor for intervention. And that's where the market, at least right now, is thinking potentially we could be headed.
Are we the only people in Midtown Manhattan?
I think so.
Bob was at home.
Yeah. Unbelievable.
Getting things done.
Getting things done. Maybe he's on his ski.
He's on his ski jolly. Yeah, he's on his ski jolly at home in the backyard. Up next on the programme, Julie Beale of Kane Addison Rudnick, Savi Sith of Raymond James, Seth Carpenter of Morgan Stanley, and Mo McHugh of PSP Growth from New York. The third hour of Bloomberg Surveillance up next.
After 20 years of financial repression, we're back to live markets.
The market's probably going to take off again.
We still see a lot of upside opportunity in U.S. markets.
I wouldn't really bet against the U.S.
The U.S. bond market is still the closest thing to a risk-free asset that there actually is.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Back-to-back weekly losses on the S&P 500. More so far this morning. Live from New York this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now. Your price action looks like this. We're down about 1/10 on the S&P, down by 2/10 on the NASDAQ. On the Russell, the small caps down by 0.15. In the precious metal space, a massive move. Gold through 5K for the first time ever, up by 1.8%. Silver up by even more, up by 5.6%. A stacked week ahead, including a Federal Reserve interest rate decision, an address from the President of the United States, and a lot of tech earnings from Microsoft, Meta, and from Apple.
A huge week ahead. You have to think of what's going on right now. The so-called potential debasement trade is backed. But Jonathan, to your point, you've been very good about bringing this up. It's in the dollar, but hasn't been in treasuries. This morning from UBS's Paul Donovan, politics overwhelms sentiment. And that is what we are seeing in gold, whether it's inside the United States and the domestic policy that's happening right now and the whole country on edge and potentially a partial government shutdown starting this week at the end of the week, or what's going on in the geopolitical space, central bank buying, the fact that geopolitical tensions are also heightened. All of that is driving into the precious metal.
Not much drama in the US bond market right now. Yields down by 2 basis points, 10s at around 420 so far this morning. How much drama will there be in the news conference this coming Wednesday with the chairman of the Federal Reserve, who would typically not engage in questions about central bank independence and policy coming out of the White House? But things seem to have changed for Chairman Jay Powell.
He might flirt with some of those questions this time as he hasn't in the past, also because he knows his chairmanship is up. He also knows he has the backing right now, what it feels like, at least in Congress, them pushing back at the White House. Senator Tom Tillis saying to us, it's not the person, it's the process. And he is not going to move ahead with whoever the administration decides to be the next Fed chair until what's going on with this probe from the DOJ, there's a bow on it and we have some closure on it. So I think there's going to be a lot of questions potentially we could see the chairman entertain at this press conference.
If it's super icy in Washington, do they do that meeting remotely? How does that work tomorrow?
Come on, by Wednesday. I will say D.C. is terrible with the snow.
Right.
They get like a centimeter or an inch and, everyone just, full on shut down. You can't work. It's a tiny city. Like, come on, you can get it together. But yeah, I think by Wednesday, let's hope that they're back in the office.
We got to put some numbers on this big freeze. This came from Aditya Bharvev, Bank of America. I shared it earlier on this morning. I'll share it again for you, just in case you missed it. The impact of Fern may drag down Q1 GDP by anywhere between 0.5 to 1.5%.
We have to think who's at work today. And then who's going out and getting lunch? And who's going out and getting coffee? Everything pretty much to stopping to a standstill. Every single guest we've had that was supposed to be in studio is now getting a little bit of an insight of what their house looks like. They are working, but they're working remotely. When you look at how many inches we have gotten, Central Park more than 11 inches, Fordham more than 13 inches, Newark 11 inches, JFK, which is why you're seeing all the flight delays, close to 11 inches. Most flight cancellations since COVID, and that number this morning just keeps up and ticking after more than 11,000 flights canceled over the weekend. It's astonishing.
Big disruption in the last 24 hours. Equities just about unchanged. We're down by 1/10 of 1%.
But we're here.
Some breaking news just to get to in just a moment. Coming up this hour, Julie Beal of Kane Anderson Rudnick with stocks looking to bounce back. Seth Carpenter of Morgan Stanley previewing Wednesday's Fed decision, and Mo McHugh of PSP Growth with earnings from 4 of the Magnificent 7 on deck. We begin this hour with some breaking news from NVIDIA. Bloomberg's Ed Ludlow has more. Hey, Ed.
Yeah, good morning, John. NVIDIA is going to invest an additional $2 billion into CoreWeave by purchasing common stock at a price of $87.20 a share. The stock right now in pre-market up. Bouncing around, actually. I think there might be some algo moves going on in that. When we spoke to NVIDIA CEO Jensen Huang last night in a Bloomberg interview, he said this is simply about confidence in CoreWeave, CoreWeave's plan, CoreWeave's management to build out capacity, accelerate data center capacity. But we asked him, well, isn't it circular financing? And his answer to that was very simply, it's not circular financing. It would be ridiculous to call it that, because it is a tiny portion of what we know CoreWeave is going to have to raise if they're able to build out data centers to a level where they can meet the demand that's already out there. He also said that it's basically consistent with the investments they've made all over the AI stack at a same level, and pushed back pretty hard on that. But unsurprising that CoreWeave, in reaction, had a big jump in the pre-market.
What do the investors that you speak to every single day call if it's not circular financing, Ed? Doesn't it just look and smell like circular financing?
They would say, well, you have to discern between the different deals. In some of the investments NVIDIA makes, they are explicit that it's not a quid pro quo. In other words, the startup they're investing in can take NVIDIA's money, but they're not required to use NVIDIA chips. In this case, CoreWeave now up more than 9% in the pre-market. There is a technology arrangement here as well. So one of the other big pieces of news, you see like AMD and Intel under pressure in the pre-market, is NVIDIA is going to start offering its CPU, not its GPU, its CPU as a standalone offering, and CoreWeave gets to be first to deploy that. It's hard when it's both a technology and financing arrangement to move past the circular argument.
Big move from CoreWeave, up 9-10% at the pre-market. Ed, are you seeing the other chip makers take a similar approach with other neo-cloud makers?
Yeah, neo cloud makers also, the AMD, the distant number 2 behind NVIDIA in the market for AI accelerators, is doing exactly the same thing with the frontier labs as well, right? Going directly to OpenAI, saying we're collaborating, we're going to agree on a capacity deal where the capacity is based on AMD chips specifically. What, to its credit, CoreWeave has said is consistently the users, the customers of CoreWeave want NVIDIA. So even if there are other products out there in the marketplace anyway, it's NVIDIA that they keep asking for. And it's not just the latest generation of NVIDIA accelerators. I should have got this terminal chart ready. I apologize. But if you look at older generations, we have this on the terminal. Hopper, for example, those obsolete older generations are seeing their rental prices go up a lot at the moment. Utilization's really high. That's the story still, whether AMD likes that or not.
Ed, good to see you. Looking forward to the programme and the coverage of this story a little bit later on Bloomberg Technology. Ed Ludlow there. Let's stay on the markets. Julie Beale of Kane Anderson Rudnick writing, I think stocks going up will require real earnings growth and not just from the lucky few, and it could create more volatility. Julie joins us now for more. Julie, welcome to the programme. I just want to build on what Ed was talking about there, that breaking news that NVIDIA is investing $2 billion in CoreWeave Class A common stock. Is that circular financing? Does it look like circular financing to you?
We could get you a little bit.
Absolutely. When you think of it genuinely, it's a little bit like, these trust fund kids being bolstered up by their dads and being like, I am a producer, right? It's hard to take it super seriously when you have Daddy Jensen supporting you and thinking that's going to be enough to kind of propel this market forward. You really need to have a little bit more growth and underlying economics. And I think that's what makes everyone nervous. The idea that you're going to bolster your argument as Jensen and say, we've done a whole bunch of these. Well, that doesn't tell you that that's not circular financing, and that the structure of the deal isn't circular financing also doesn't make a lot of sense to me.
Well, Jensen Huang told Bloomberg that he thinks this idea is ridiculous, basically talking about that they have the confidence in these companies. It's only a small percentage for them, the amount of money that they ultimately have to go raise. But when you see deals like this, what does it make you think of the AI trade writ large?
I think that the problem that we're coming to is that we still don't have a lot of clarity on, firstly, whether it's going to be the most important thing to have the large language models themselves, or are they going to become commodities? I think that's concern number one. And the second thing is, what are going to be the underlying economics if adoption is not as strong as people are hoping for, right? We continue to see studies of companies trying to do pilots that are not quite working the way that you would want. And that is going to slow adoption, right? It's not good advertising if everyone is saying, yeah, I mean, it works. It's saved my employee about 15 minutes every day. So that's good. That's good. We should spend, billions of dollars for that.
You also say that AI potentially, you have this question mark, whether or not it's to blame for labor market softness. Are you seeing that play out right now in the business space?
I just don't think that that's really to blame just yet. I think the productivity boost that we saw coming out of last year was more a function of actually getting labor markets where they need to be and much more right-sized. We had so much overhiring that happened in the pandemic when there was this grab, this mad dash for any kind of labor. You could work at home with your dog on your lap. It was no problem. We just needed you in the seat. And I think businesses have actually kind of digested a lot of that and started to make the people that they hired much more productive. I think AI is going to be a massive productivity tool. It's going to completely change the nature of work. But as it stands right now, outside of, say, probably coding, it's probably not delivering on the productivity growth that we're hoping for. I really believe in it long term. I probably don't think it's in the here and now if Copilot's making this many mistakes.
I think it's fair to say there's a lot of people working with dogs on their laps today.
I was just thinking of Tom King because he has that little fluffy white dog.
TK was doing that from home on TV through much of the pandemic with both dogs.
Yeah.
And was not hiding it. Julie, let's talk about some of the moves we've seen in the equity markets so far. Small caps, the outperformance of small caps so far this year, and whether you think that appropriately reflects the amount of GDP growth you think will be stimulated by tax refund season at the early start of this year.
Yeah, I think that it's really hard to have any kind of negativity on the U.S. market, at least for the first half of the year, when you have this just tsunami of stimulus that's coming through fiscally. I think part of what people's enthusiasm for small caps is they've really been left for dead. And there's this recognition that there are certain parts of the more speculative small caps, kind of quantum and biotech, that have people the most excited. I would say that you probably have a good outlook for the U.S. economy, but I would be in higher quality tiers of small cap rather than focusing on, your lowest quality, highest beta. There should be a reversal. We haven't seen kind of this level of move away from quality and small cap in quite a while. You have to expect the pendulum's going to swing the other direction.
Judy, is there something that small caps are insulated from that large caps are exposed to? We keep bringing up this question as we look down to Washington and some of the headline risk. Is there a story there?
Conceivably, you have to think a little bit about the mix of the businesses that are in the small cap index. So you have less technology than you used to. You have more banks and real estate. But the thing is it's hard to really talk about banks and real estate without talking about interest rates. And interest rates are inherently an international thing. So it's really hard to say whether they're completely divorced, because many of the drivers in small caps are really about interest rates. So I would say, broadly speaking, yes, there are places where you can be more insulated, but we have a very global economy, and a lot of these factors are pushing these stocks around as well.
Judy, good to see you, as always. Judy Bill there of Kane Anderson Rudnick, looking ahead to some of the tech earnings we get this week. Meta and Microsoft on Wednesday. Thursday, we get Apple. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. CoreWeave. Shares rallying following a $2 billion investment from NVIDIA. The chip maker announcing it will begin selling CPUs as standalone products. CoreWeave will be among the first to deploy them. NVIDIA CEO Jensen Huang telling us here at Bloomberg the move reflects growing confidence in CoreWeave's business model. Elsewhere, a powerful winter storm blanketing much of the U.S. East Coast with heavy snow and sleet. More than 1 million homes and businesses across the U.S. losing electricity, and the airlines cancelled the most flights since the COVID-19 pandemic. And finally, the Trump administration investing $1.6 billion into USA Rare Earth in exchange for 10% stake in the mining company. USA Rare Earth is also raising $1.5 billion in private investment to accelerate domestic heavy rare earth production. A stock is up by close to 20%. That is your Bloomberg brief. Up next, the morning calls plus Savvy Sith of Raymond James with airlines looking to get back to normal after massive cancellations. From New York City, you're watching Bloomberg TV.
The banking sector has had some strong earnings coming in that all of a sudden throws some potential cold water on what could happen there on the earnings front. So the concern would be that while you have a reasonably good earnings picture, which we think we do right now, that anything that looks like it's going to threaten that earnings picture is going to be problematic, because that is what is going to drive equity prices.
That was Sarah Hunt of Alpine Saxon Woods joining the programme a little bit earlier on this morning. If you're just joining the show now, welcome. Equity futures right now in the S&P just about unchanged. The upper inbound 1 hour and 14 minutes away. That's the price action. Let's get you some morning calls. First up, KeyBank raising its price target on Alphabet to 360, citing stronger cloud growth and profitability. Elsewhere, Rothschild & Co. Redburn upgrading Meta to buy, saying its upside potential outweighs any near-term risks. And finally, JP Morgan raising its price target on Apple to 315, expecting better than expected iPhone demand and lower operating expenses. They're your morning calls this morning. Let's turn to the weather. Nearly half of the United States is experiencing dangerous winter conditions. More than 800,000 homes and business are without power. But Waddell of AccuWeather is in Greenville, South Carolina, and he joins us now for more. Bill, welcome to the program. The worst of the snow behind us. How dangerous is the weather going to be through the next several days?
Yeah, good morning. It is the temperatures, the coldest air so far this winter on the backside of this storm. That's the biggest safety concern over the next few days for the hundreds of thousands of people across the country who are without power and without heat. Here in Greenville, South Carolina, a lot of people waking up to this, about an inch of sleet and ice all over the place on the sidewalks and the streets. And then we had freezing rain that fell on top of it. So you can imagine, especially for people who live down hills like this one all across the South and Southeast, they may be stuck at home for several days. And when we're talking about the widespread impacts of this winter storm. It's really staggering, the economic effect it's having. More than 200 million people impacted by this storm across more than 24 states. And AccuWeather experts estimate that the preliminary total damage and economic loss for this winter storm, $105 billion to $115 billion. I mean, that is a lot of money we're talking about here. With the travel shutdowns, we were in Atlanta earlier for the storm, where one of the busiest airports in the world had thousands of flight cancellations. And then you think about all of the business, all of the commerce, all of the rail disruptions, and especially along the ice storm section, the southern side of the storm where there are extended power outages. Businesses could be shut down for days. And if they don't have emergency generators, or if those generators fail or run out of fuel, then we're talking about goods, groceries, pharmaceuticals that go bad that can't be refrigerated. So very impactful storm. And just to put this in a big picture context, AccuWeather experts say this winter storm is the most economic impactful U.S. weather disaster since last January. That's when we had the California wildfires, causing an estimated $250 billion to $275 billion in total damage and economic loss, according to AccuWeather. So it's been about a full year since we have seen a large economic U.S. weather impact like this one. Remember, we did not have any hurricanes making landfall in the U.S. this past season.
Wow, that's some context. It's also a messy commute, Bill, here up in New York when it comes to what's going on the Long Island Railroad and also some of the other trains right into, the main metropolitan area of New York City. What does the rest of the week look like, given we're going to get cold temperatures?
Absolutely. It's going to be tough. The cleanup, the plowing, all of that is really slowed because of the really cold Arctic air that is surging in on the back end of this. The Midwest, AccuWeather is forecasting real field temperatures 30 to 60 degrees below zero at times this week. So big safety concerns, even for people who do have power and heat, who are outdoor workers. They are dealing with trying to clean up these icy streets and the snow. But again, that cold is going to slow down the cleanup process here, and that's why we're saying that economic impact, it is going to linger for days, and of course, in the hardest hit areas, weeks or longer.
Hey, Bill, good to see you. Stay warm, sir. Thanks for catching up with us. Bill Waddell there of AccuWeather. Let's turn to the airlines. The storm leading to the most flight cancellations since the COVID-19 pandemic. Savi Sith of Raymond James joins us now for more. Savi, welcome to the programme. As you look across the airlines, the airports across this country in the last 24 hours, who was hardest hit?
Hey, good morning. It's fairly broad-based. Obviously, to begin with, you saw American getting hit just given what happened in Dallas, but all the airlines are having significant cancellations. However, what I would kind of remind is the nice thing of a winter storm, as much as there could be something nice about it, is that you do see it coming, unlike summer storms. And so I would chalk up a lot of Sunday's cancellations, which were significant for airlines, making sure that the aircraft and crew are in place so that once the storm passes, they can get back to flying relatively quickly. Now, there are a high level of cancellations today, but nowhere nearly as many as there were on Sunday. So, as long as folks can kind of get out of their houses and get to the airports, we expect the operations to start resuming because airlines had some early warning and were able to prepare ahead of time.
Well, 3,600 and counting for today, Savi, when it comes to the cancellation. So when do you think we truly will be back to quote unquote normal?
Yeah, what we're seeing today is a little bit similar to what you saw on Saturday, so elevated. We'll see. It really depends on how the winter progresses and getting crews to the airports. But I suspect by midweek we'll be back to normal, if not already by tomorrow.
Savi, I don't want to make this worse for the airlines, but potentially could be a perfect storm this weekend. What happens if the U.S. government does shut down?
We'll have to see. You saw what happened last time. What I would say, kind of from the lessons learned last time, is that demand didn't have an impact. The impact really came once you got to the end and the FAA kind of required cancellations. I think that's when you really started to see demand being impacted, and maybe even a little bit before that. Once the shutdown was about a month in, I think you started to see a little bit of impact, but at least early days, there isn't much of an impact. You do have TSA agents and FAA workers, really showing up, even though, they might miss a check in a week or two. So hopefully we don't get a shutdown. Hopefully it doesn't, if we do get one, it doesn't last as long as it did last time and doesn't come to the brinkmanship that it came to last time.
Let's finish on an airline that's really shown up, not in the last 24 hours, but in the last 12 months. This from the Wall Street Journal. Airline of the Year, Southwest. Savi, what is Southwest doing right?
Yeah, I mean, I think they learned their lesson after the winter storm of in December 2024. And really, or 23, and really kind of improved and invested in the operation. They probably also benefit a little bit from being in the right geographies, but more so it is what Southwest has done to really focus on managing the operation. And I would kind of point out that they did this, had this performance at a time that the airline was going through a significant change in, their product offering and strategy. So definitely a commendable result there.
The performance gap in the stock market between a Southwest and American Airlines couldn't be wider. I mean, Southwest was up by more than 20% last year and American Airlines was down by more than 10%. Savi, what is American Airlines getting wrong? And incidentally, by the way, they are joint last in this survey, this Wall Street Journal Airline Award of the last year or so. They came joint last. What is American Airlines doing wrong?
I mean, I think American also had the unfortunate, incidents that hampered them early on last year. So that also had a hit on American. But I think you are seeing them making some changes this year. They announced it in December about kind of adding a little bit more, schedule cushion so that they can make connections. They are trying to do that. But yes, definitely on the operations side, both kind of internally, what they could control, and then externally what they couldn't control really hurt them last year. In terms of kind of stock performance, I think, again, Southwest has come up with a very credible plan on turning around their earnings, and you're starting to get early signs that maybe they can execute to that. Still a lot of skepticism in the market, but I think American really needs to come up and show that they can do something similar this year as well. There are kind of early signs that they're trying to do that. But they really have to kind of put up the numbers.
They've really got to step up big time. Savi, good to see you. Savi Sith there of Raymond James on the airlines and travel and the situation of the past 24 hours. Up next on the programme, we'll catch up with Seth Carpenter of Morgan Stanley, previewing Wednesday's Fed rate decision. Plus, Danny's back with your morning movers. CoreWeave shares surging after a $2 billion investment from NVIDIA. CoreWeave higher by close to 10% in the pre-market. Live from New York City this morning, good morning. You're watching Bloomberg TV. $60 minutes away from the opening. Bell equity futures slightly negative, just about unchanged on the S&P so far. We're down about 0.2 on the Nasdaq, going into a big week for earnings from big tech. That starts on Wednesday into Thursday. So we count you down to the cash open. Let's get you some single names, some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Let's start with that big move in gold, surpassing above $5,000. That's moving the miners this morning. Newmont, those shares up 3.8%. Barrick Mining up 3.33%. Both of those will open, likely close at new records too, after already reaching new records on Friday. Elsewhere, some breaking news coming in the last 30 minutes. That not OpenAI, you'd forgive me for being mistaken, NVIDIA is investing $2 billion in CoreWeave. It's already invested in CoreWeave. This just adds to it, part of its mission to get 5 gigawatts of AI energy running by 2030. Just to put this in context, that's only 2% of what CoreWeave even wants to spend on its infrastructure. CoreWeave shares up 9%. NVIDIA, little change this morning. Finally, another deal to wrap things up. The U.S. government confirming earlier reporting and announcing that they are making a $1.6 billion investment, a non-binding agreement into USA Rare Earth. They're also getting over $1 billion in a private investment too, hoping to speed up the development and digging out of the ground of those rare earth metals. So those shares soaring just under 20% in the pre-market trade, John.
Big move again. Danny, thank you. Losing count, and we're all asking who's next, because you have to imagine someone's next.
Intel, Lithium Americas, there have been half a dozen companies that this administration has gone out, taken equity stakes, and saying this is because of national security. And yes, when you see a company, especially with the words rare earth in the title, you can expect other similar companies that have anything to do with either processing those rare earths, finding those rare earths. They are going to potentially have an eye of this administration.
To your point, they've made themselves easy to find, right? With a name like that one. That's the latest on that front. Let's turn to the Federal Reserve. Traders looking ahead to the first central bank decision of the year. Joining us now to discuss is Bloomberg's Enda Curran. Enda, welcome to the programme. This one with some additional spice potentially in the news conference, giving Chairman Powell's more assertive posture towards the White House.
Indeed, it's going to be a lot of policy and a lot of politics, John. On the policy side, as you know well, they're not expected to move, but still a lot of interest around any fresh commentary on are they any closer to the neutral rate, for example, and where are they now in the labour market? Any hint of confidence that they think the labour market may have stabilised? But really, it's on the political side where all the focus will be in that press conference, given the Department of Justice subpoenas on the Fed since the last Fed meeting. Chair Powell will be asked about it. He'll be expected to comment. He probably won't dive too deep into the legal side of that, but it will be interesting to see whether or not he doubles down on his broader commentary around this being an attack on the independence of the Federal Reserve. So like I say, lots of policy and politics, but I think more interest in the politics this week.
Well, Enda, let's stay on the politics and the process. You're tracking a horse race, I'm sure. Who's in front, who's behind, with regards to the race to replace Chairman Powell. Now, Enda, Annmarie and I were talking to Senator Tillis in the last week or so. Do you think people are underestimating just how long this could actually take to get that person, whoever it might be, nominated and confirmed down in Washington, D.C.?
I think that's a real complication. John, it's not a complication many people saw at the start of the year. I mean, to your point, no matter which name the president nominates, whenever that comes, and they've said it's coming soon publicly, and our colleagues in the White House have been reporting that, BlackRock's Rick Reeder certainly seems to have gone ahead of the pack at the moment. But whichever name comes out of that pack, they are going to have to somehow get through the Senate confirmation process. And as you mentioned, Senator Tillis has said he will not budge. He will not approve any Fed nominee until this DOJ threat against the Fed is fully resolved. And of course, that begs the question, what does fully resolved mean? When do we get to that point? How do we get to that point? And of course, there's a whole other dynamic going on in the background then as well around, does Chair Powell stay in that committee, keep his seat there? What would that mean for Governor Myron, for example? So even though we expect to get a headline announcement on a new Fed chair at some point soon, there's going to be a lot of pieces of the jigsaw in the background that still haven't been put in place, and there's going to be a lot that has to be worked out in this, John.
Enda, appreciate it. Enda Curran down in Washington. Annmarie, this is so much messier than it needed to be.
And if you know that the Senate is going to be a potential hurdle and they're not going to budge until the DOJ investigation is wrapped up, then potentially why would you make the announcement so soon? Which is why the president keeps saying a week, 2 weeks. We've been saying that literally for months, which is why I think potentially this can drag on for a lot longer than this administration was expecting. And you have to think the Treasury Secretary is pulling out his hair because this was supposed to be swift.
Let's stay on the Federal Reserve and we'll talk policy. Seth Carpenter of Morgan Stanley writing, we push expected Fed cuts to June and September. Lower unemployment suggests inflation will play a larger role in rate decisions. Seth joins us now for more. Seth, welcome to the programme. This is something of a theme for you and the team over at Morgan Stanley, so let's get into it. It was the labour market driving decisions at the back end of last year. How important is the other side of the mandate going to be in the back half of this year?
I think one of the key things to remember is the Fed seems to have fairly squarely come down on the view that the inflation that's coming from tariffs is temporary, that it's going to fade on its own. And so we still think there's more of that tariff-driven inflation to pass through the first quarter of this year. And then inflation should peak and start to come down. And for us, that really will be critical for the Fed. If that plays out along those lines, they'll get confirmation that the tariff-driven inflation was temporary, and then they'll start to ask themselves, okay, how soon can we pull policy down to something that's neutral so that they're not getting in the way of the economy growing, but they're also not necessarily stimulating things, because ultimately there is this tension that the spending data has been reasonably solid, but it's the employment data that have been soft. They pulled the policy rate down a lot in response to the soft employment data. Things still look like they're chugging along. Our forecast is that even if you get choppy data in the first quarter, the underlying trend is there and things will keep chugging along. And so I do think they're in a holding pattern, given the strength in the economy, waiting for inflation to decisively start to move back down towards target.
Seth, it's interesting we're talking about this sort of trend line back towards target, these disinflationary forces. At the same time, this phrase has come from you and the team, I believe, in the last few weeks, and that phrase is overheating, the risk of overheating. How great, Seth, is the risk of overheating the first half of this year?
I mean, I think it's something we have to pay a lot of attention to. The underlying strength of the U.S. economy is there. We are seeing clearly spending on the household side from the top end of the income distribution. That's been quite strong. We're seeing the CapEx spending driven by AI. That's been quite strong. I think the real question becomes what happens with the labor market? It's been soft. Does that start to catch up to the aggregate spending in the economy? Do we start to see even more spending? Maybe because we have underestimated just how much the fiscal package from last year contributed to spending this year. I think there's a real consideration there that aggregate demand is just fundamentally stronger, and that could over time lead to overheating in the economy. The unemployment rate, we got one reading where it ticked back down. That was a surprise for us. Was that noise or was that signal? If it's signal, then I think the overheating risk is there.
If we are thinking about potentially overheating in this economy, what would it mean if we get a Fed chair nomination that is very close to this administration?
I mean, I think there's a lot of considerations. The first thing to keep in mind is you all were talking before about the different names. I would just say, if you think about all the names that have been floated publicly and consistently, none of them is particularly far outside of mainstream thinking. None of them is sort of a completely unusual name who thinks about the world in a fundamentally different way. That's one point. Another point is decisions on policy really do get made by a committee. And this committee is, they're torn right now about whether or not they cut at this meeting, how much to cut, all of those sorts of things. But they're not torn about going to 0 versus going to 10%. So the committee itself is pretty solidly in an orthodox place. What that means is even a chair coming in who traditionally has had a lot of influence on the committee, you're not going to be able to get a massively different outcome for policy than what the committee would have done otherwise, unless and until you get such a huge turnover on the board. And so for this year, I really think the reaction function for the Fed is more or less business as usual.
Seth, would it be business as usual if Jay Powell, because the DOJ investigation is not wrapped up, stays on longer than his chairmanship should be expired?
I do think so in the following sense. Chair Powell has been very clear, and I very much take him at his word. He is focused on doing the mandate of the Congress for the Federal Reserve, maximum sustainable employment, stable prices, based on the available data, analytics, and judgment. I think if he were to stay on, he would redouble his efforts to just try to stay very much on that narrow path. And so in that regard, I think it keeps sort of business as usual for the reaction function of the Fed.
Seth, any outstanding questions that you think need to be asked on Wednesday, or is this a bit of a snoozer?
I mean, I really do think there are questions that the reporters in the room should ask in terms of how much conviction does the chair have and does the committee have about the ultimate temporary nature of tariff-driven inflation. Remember, Chair Powell got a lot of heat for having called COVID-driven inflation transitory. Now the committee have gone back to the well and said that the inflation from tariffs is going to be temporary or some other adjective. I think that's a place where there's probably a bit more pushing that could be done.
Seth, good to see you. No doubt Mike McKee's listening, and he'll make that push. Thank you, sir. Seth Carpenter there of Morgan Stanley on the Federal Reserve. Basically, the way things are set up, at the end of last year, the labour market drove the eventual rate cuts we got from the Federal Reserve. Team at Morgan Stanley believes it'll be the disinflation they're anticipating in the back half of this year that's going to unlock the door for more rate cuts further down the road.
When it comes to tariffs, though, actually, Amazon CEO speaking at Davos was talking about the fact that they're finally starting to see some of that pass-through of the tariff-induced inflation starting to creep into some of those businesses that they sell on their website. So potentially this is going to be back to tariffs once again when it comes to the press conference. And Jay Powell, besides all the political noise that he's definitely going to get questions about.
Conditioned by the experience of the last 12 months, so many people were burnt by that call. They just don't seem to be making that call this year. They're not looking for that inflationary bump from those tariffs. If you're just joining us, welcome to the programme. Equities down by only 0.1% so far this morning. Let's get you an update on stories elsewhere with your Bloomberg Brief. First up, CoreWeave shares jumping in the pre-market after Nvidia announced a new partnership with a $2 billion investment. CoreWeave will be among the first to deploy new Nvidia CPU chips and storage systems. Elsewhere, a massive winter storm hitting the US East Coast on Sunday, bringing heavy snow and ice, straining electric grids and grounding thousands of flights. More than 800,000 homes and businesses across the US are without power. And finally, in sports, the matchup is set for Super Bowl 60. The New England Patriots taking on Seattle after defeating the Denver Broncos, while the Seahawks took down the LA Rams. The Patriots are eyeing an NFL record 7th Super Bowl title, with the Seahawks hoping to win their second. You got rid of the Chiefs, you ended up with the Patriots all over again.
Yeah, we're back to the Patriots. I just feel like deja vu. I've actually worn that Patriots ring before, and I guess they're going to try to go for another Super Bowl ring. It's massive.
Up next on the programme, less football. We'll set you up for the day ahead and the week ahead, plus my IQ of PSP growth with key tech earnings on deck this week. From New York City, you're watching Bloomberg TV.
I don't think there's any uncertainty about AI. I sincerely believe there is no bubble in the AI space.
The idea that this technology becomes obsolete or useless after 3 years or 2 years, it's bunk.
The U.S. has been ahead in the digital race, and because you need a digital foundation, the U.S.-based companies are ahead.
This is the largest infrastructure build-out in human history. That's going to create a lot of jobs.
Society will have more production. We're going to cure a lot of cancers. You're not going to slow it down.
Fantastic lineup of guests in the last week or so from Davos, Switzerland at the World Economic Forum, weighing in on the future of AI. And I have to say, it was very difficult to find anyone who wasn't bullish on that particular theme.
I don't think there was anyone who was not bullish on AI. Everyone out there was very constructive, especially when it comes to the concerns that what it means for the labor market or concerns about things like circular finance. It was no. You got it wrong. This is going to be the trade, and there's always dislocations when you're moving with new technologies, but this is going to be ultimately productive and good for society and the economy.
More on that story in just a moment. The price action looks like this going into the opening bell. Equity futures unchanged on the S&P 500. On the Nasdaq, down by 0.2%. As we count you down to the opening bell, the trading time for the week ahead looks like this. At 2:30 p.m. Eastern, the president participating in a policy meeting. On Tuesday, the president speaking in Iowa, and results from American Airlines and General Motors. Wednesday, an FOMC rate decision and Fed Chair Jay Powell news conference, plus earnings from Microsoft, Meta, Tesla. Thursday, another round of jobless claims and Apple earnings. Then on Friday, PPI, and a deadline that's becoming increasingly important over the last few days, the government funding deadline.
Yep, potentially. The odds of a partial government shutdown have went right up this weekend, given what is going on in Minnesota. Senate Minority Leader Chuck Schumer came out and vowed that he will not vote yes, and neither will his caucus, on passing through the appropriations bill that we need to keep the government open if DHS funding is linked to that. So right now, everyone is expecting a government shutdown. Guess what? The House is out of session, and we're a storm, and they're going to have to come back. It's going to get a little bit messy in Washington.
That's one to watch going into the weekend this week. Let's talk about those tech earnings. Mandeep Singh of Bloomberg Intelligence joins us now with a preview of this week's results and a sneak peek of next week as well, with Alphabet and Amazon on deck in early February. Mandeep, welcome to the programme. What are you focused on when these guys report later this week?
Look, I mean, for me, it's always about cloud growth when it comes to the hyperscalers. And last quarter, we saw Microsoft hit 40% growth for their Azure business. And it was aided by, AI. That's where all the CapEx dollars are going. So you want to see that cloud momentum carry on. Even Alphabet saw 35% growth in their cloud segment. So that to me is the real sort of ROI indicator when it comes to these CapEx investments. The other thing to keep an eye is there was a pushback last quarter on Oracle in terms of, their debt really reaching a point where a market felt it was reaching a limit. It exceeded their operational cash flow. So would there be any other company that would be put in that sort of basket this quarter? And especially someone like Meta, which plans to spend over $100 billion in CapEx with no cloud business. I would be curious to see how market reacts to, them raising CapEx. I mean, obviously their top line growth has been super strong, but that would be of interest for me in terms of the pushback that market may have, on companies really spending more on CapEx.
Mandeep, I'm right there with you. I think that's got to be an important one to look for, particularly given what we saw in the final few months of last year. And what we saw from these guys, the amount they're spending. Mandeep, I saw an estimate, a number that came from JP Morgan Asset Management. Michael Sembler's put this out, that 40% plus of the GDP growth that came in the first 3 quarters of last year came from the spending of tech companies boosting CapEx. Mandeep, ridiculous numbers. Do you think with Meta alone, they're an isolated case of weakness, or are you seeing other examples of that in the space?
Look, I mean, all the neo cloud guys, they're much smaller than a Meta, but at the end of the day, you are spending so much upfront with the hope that it's going to translate into recurring cloud revenues down the line. Amazon as well. Any company that is now spending in excess of their operational cash flow, I think it's a fair question to be asked in terms of how long will this last? And then what is the recurring revenue down the line that investors can hope for? And if you don't have that visibility, which was the case with Oracle, that's where you start to see pushback. So I do think the neoclouds would also face that kind of scrutiny. And that's why this CoreWeave NVIDIA partnership is of significance, because now you have that NVIDIA buffer in terms of, okay, you have some cash that you're getting from NVIDIA to spend on.
Mandeep, appreciate your take as always, sir. Thank you. More from Mandeep through the week. Mandeep Singh there of Bloomberg Intelligence. To build on this conversation, Momo Q of PSP Growth joins us now for more. Momo, welcome back to the programme. I'm sure you heard some of the comments from Mandeep Singh just moments ago. Do you believe this could be the year of investor pushback?
I think it depends on where you sit. First of all, good morning. It's great to be back on the show. Big week for tech earnings. Investors are focused on who is at the center of the AI workload. We're shifting now from AI in terms of building and training a model to inference, which is actually using it in practice. So if you're sitting at the core of AI infrastructure, like we saw with CoreWeave this morning, then you're in a great spot. We're even seeing this not just in the public markets, but in the private markets. There are a lot of inference market leaders out there, like Together, Fireworks, Space 10, that are seeing record revenue growth. So the companies that are positioned at the center of the AI wave in terms of running and execution will be well positioned. If your strategy is not necessarily at the core of those, if you're still figuring out your AI strategy, then investors are going to have scrutiny over you in terms of where all that investment is going.
When it comes to the earnings we're going to get this week and next week, you seem to be a little bit more bullish on Alphabet, given how investors feel about Gemini. What does that mean for the likes of, say, Meta and Microsoft?
I think for Meta and I would say Apple probably were those two that where investors are still trying to figure out what is their AI strategy. Microsoft, Alphabet, I think is going to be more on execution. So investors can pretty easily think about the positioning of Microsoft and Alphabet in the new world of AI. Sure, execution, you might have issues in terms of, are they spending too much on CapEx? Are they going to have margin compression? But overall, the strategy is pretty sound. But when you think about Meta and you think about Apple, they've had leadership turnover. They've tried a few things in the past, metaverse, which is not directly AI, but that still affects investor confidence in their ability to execute. So when your strategy is not somewhere where investor has full confidence, then you're going to have a lot more pushback. And I would put Meta and Apple in that latter camp.
Do you feel like the bar is very high for these tech companies this week?
Absolutely. I think you are seeing markets have a huge rally already, right, over the last few quarters. So anytime that you have a high bar, just meeting earnings is not enough. We've seen multiple examples in recent weeks where a company has beat earnings, but yet their stock price has still either gone down or at least stagnated because investors are expecting even more growth. So this is a week where just beating your numbers is not going to be enough. Investor has to have confidence in, one, your overall growth outlook, but two, as we've heard all week, investors' confidence in your durability in the new AI era.
Let's get beyond this week, Momo. You're a much, much longer term thinker than just this week. Are you developing thoughts about which part of the ecosystem will struggle to make money ultimately? Because clearly someone is going to make a ton of money from this theme. I'm not here to bet against the technology. This is where the world is heading. But is there a part of the ecosystem where you think will struggle to make money?
I think you're going to see a lot of compression on the application layer, which is the part that touches the users and touches the enterprise. That's the piece where margins need to get squeezed. There's going to be a lot of competitive pressures. So contrast that to what we were talking about earlier, right? Which is at the core of the AI infrastructure, you're going to have market leaders that are going to be pretty resilient. But as we've already seen in the weakness of their prices, application layer software like Salesforce and Adobe and Workday have seen real weakness this year and I would say in Q4 as well, because they're getting pressure from both the AI native startups, they're getting pressure from model companies like Anthropic and OpenAI trying to go up and capture the same budget where they were previously dominant in. So I think that's the part where I don't know exactly who's going to shake out, but there's going to be compression and someone's going to lose.
In the next 30, 40 seconds, that's all we have left, forgive me. Is that kind of the opposite of what we saw take place with the internet boom?
I would say there's actually parallels in my opinion, which is anytime you have a technology shift, you're going to have big winners and big losers. So I think this is going to be the case too, where there's going to be a lot of winners and we'll stand by to see who they are.
Mame Q of PSP Growth. Appreciate it. Mame, thank you. Just thinking back to the building blocks of the internet era and the people who ultimately made money 10, 15 years later.
Yeah, exactly. I mean, there's a lot of parallels, but also you have to think of all those risks. Remember everyone that added .com and internet to their titles?
True.
Kind of felt that way at Davos this year, AI and everything.
I know. Down the whole promenade, right? It's a little bit
Couldn't
overkill.
escape it.
I'm right there with you. I felt it too. Coming up tomorrow, we'll catch up with Cameron Dawson of New Edge Wealth, Evan Brown of UBS, the former Kansas City Fed President Esther George, and Joe Amato of Neuberger Berman from New York City.
Day 8 at the Australian Open. 20-year-old Lerner Tien upset three-time finalist Daniil Medvedev for the second straight year as he took out the Russian in 3 impressive sets. And Coco Gauff is into the last 8 of the slams for the 10th time in her career after she took out Czechia's Karolina Muchova in 3 sets. And don't forget, TC Live will keep you up to date daily.